Boom! We are live. What is up, everybody? Happy Tuesday. Happy Tuesday. Happy Tuesday. A happy Tuesday it is indeed so far. And that's because the S&P 500 is up today, which I haven't really been able to say a lot the past few weeks, but up about 1.3% right now. So I like that. And yeah, I mean, we'll see if we can hold these gains. We have not been able to. Basically, any rally the past 3 weeks, hold gains. Tech leading us today. The Qs are up 1.8%. SPY, like I said, around 1.3, 1.4 right now. And then your Dow up only about 0.7%. So tech definitely strong today, right? We can check in on the big tech names that we always do. Tesla, Netflix, you name it. But I've got my man David Green in the background here, so once we get the show started, we'll bring David on. We'll be doing some live trading with him, and then after that, we've got some more great guests at 12:30. Mark Manduca from GXO Logistics will join us. He's a regular on CNBC and Bloomberg. We'll talk about what he's seeing, what GXO is seeing in terms of the logistics supply chain. Are we getting some alleviation in terms of the supply chain pressures, or are things as bad as they were 6 months, a year ago? Also, we're going to check in on consumer spending, because I'll tell you what, I know I said this yesterday, but everyone, you go on Twitter, you go on FinTwit, wherever you're getting your financial news from, everyone's saying recession this, recession that. But I'm telling you, I go out shopping at Target over the weekend, go to Las Vegas. People don't seem to get the memo. People are out there spending money. And we'll take a look at some of that data, so it's not just anecdotal. Who cares if I see 100 people at Target buying a bunch of shit? That doesn't mean anything. We got to look at the actual data, so we'll do that today. David Weiss, congrats on becoming a member of our YouTube. Anyone can feel free to do so. I believe it's only $3.99 a month, and you get some special emojis and cool things as well. But all right, let's go ahead and get the show started and bring on David Green.
Oh, I like
Mr.
that.
Green.
406.63. Good afternoon. What is it? Good afternoon. Good morning.
I'll stick for morning for now for the next 25 minutes.
Yeah, finally we're getting a little strength in the markets, right? For more than 15 minutes, which I guess is a good thing. We anyone who was with us last week, I and a bunch of people that we're with got back into the market for the first time. I've been in all cash for quite a long time. I was hoping we get more follow through to the downside, actually, but we came damn close to a couple of our big levels on the spiders. I think we were a tick away from being down 20%, right? I think we were down like 19.1% or something in the spiders from the highs. What up, MD? So yeah, I dipped my toe back into some things a little bit last week. It has been my experience that we probably go back and test those levels again, at least at some point. But let's thank God for small favors and where we are right now, right? It's better. Better for sure. And today it's AMD is extremely strong. Watching Apple. Apple's relatively weak considering what's going on. We dipped our toe in Apple a little bit last week also. Got a little bit below 140. Things are looking good for the moment, right? I'll give you guys a couple of big levels on the SPY. And we got above the first one today. So I'll go to my daily chart. And our first little resistance level is around 404, right? So our target in the SPY that's going down was 385. We got to 385.15. So we were pretty close on the way down. And we just got severely oversold on a daily chart. So it's good we got over this little 404 level. We kind of need to hold that now. And our next resistance is up at 409. So we got to get strong above 409 to reverse this major downtrend we've had on the daily chart. So we'll see what happens. Again, knock on wood, it's better than it was, 5 days ago, right? A lot better. So we'll see if we continue to get follow through from here. My inclination is going to be short the market if we get up near 409 in the spiders. Got to prove to me that we get above that stuff. How's everything going with you, Aaron?
Everything good with me, Mr. Green. Made some money on some Baba calls this morning that I sold.
Excellent. We were just looking at a little double top in the spiders. We're going to look at AMD to buy on a pullback. Been very, very strong trend all day today. We caught a little trade early in the day when it got down to this 98.50 and it spiked up a bunch. Here, guys, everybody can see. Let me make my charts bigger. We got down and we tested our 30 EMA, and we bounced, what, $2.50 off that right now. So very strong stock. We're going to look to buy it. We're going to bid $100.20 if we pull back to our 15 EMA now for the trend trade. How's everybody doing out there, guys? Everybody all right? Trading's been a little better, right? Look, when we start going up, it's always a little better. No, I'm going to go to the 120 on the 15, Chris. I'm going to let this thing come up a little bit. So I'm looking here at 120 on AMD to get back into this nice uptrend if we get a decent pullback. Coin. Ooh, who wants to talk about coin? Affirm. Yeah, some of these things, guys. Affirm, TDOC, Rivian. They finally got some bounces off, way oversold and almost dead positions, right? Yeah, I mean, coin got down to $40 the other day, right? I want to show you something in coin. I think it was, I don't remember what it was. The day that it happened, it got down to 40. We had a nice support level down there. But again, we look at the daily chart in coin. Right, this is still a major downtrend, guys. It got way overdone. Check this out. All right, so you guys know we like to do reversal swing trades when a stock on a daily chart gets below a 20 RSI. Well, that's exactly what happened here. When coin got down to the $40 level, we had like an 18 RSI on the daily chart, telling us it's going to reverse. But the first resistance on here is $76, which again I would be more apt to short than buy because I don't believe that we've seen the lows, or at least we're going to retest those lows. D-Dog, yeah, check this out. Check this out in D-Dog, everybody. All right. Yeah, Bernie, beautiful down on a downtrend. But look at this, everybody. This is a pivot point in D-Dog at $88. Check this out. The stock went down $15 to hit that level. It didn't break it by 50 cents. Right? Check that out. And from 87, we've gone up $5. That's pretty cool. Guys, I like a little short in D-Dog on our 65 at 95.60. Let's put a little order out there. That's having a huge, huge rally now. So let's put a little 95.60 in D-Dog on a short. That would be our 65 EMA. I think we'll get a little pullback from that. You guys have a good time in Vegas, Aaron?
We did. It was actually my first time in Vegas.
Excellent. Really? First time. I went there. Been there a couple of times. The first time was on my my first honeymoon about 30 years ago.
Really? That's a fun place for your honeymoon.
Well, we went to Hawaii and we stopped there on the way back.
Oh, okay.
Yeah, so we had a little stopover. Myrna going. Okay, what do we got in Myrna, guys? Pivot point at 144.80 in Myrna. So you guys who are just joining us, everything we do is based on technical analysis. We have all our moving averages and pivot points and stuff. So we're looking for stocks to hit one of our lines. If it's going up, we want to short it. If it's going down, we want to buy it. That's a simple version. So a couple of things we're looking at now. D-Dog, we're seeing if we can get up to the 65 EMA to short. Do I see NVIDIA? Let's go to SPHD first. Somebody asked about that, Dante. Do you think we'll ever come close to 50 again? It's close to 50 now, SPHD, relatively speaking. Yeah, it's only $2 away. I think that's very, very possible. Why not? UPST, do I see NVIDIA continuing? All right, let's see where we are. I think we're getting a little stretched short term in NVIDIA. The high this morning was 183.70, so I look a short a double top if we got back up there. And maybe it's setting up for an afternoon trend now. So more likely, I would want to buy NVIDIA on a pullback. And if it gets up to the double top short. But one of the people in my room posted this trade this morning. Alex in our room, and he is definitely one of the best traders we have in the room. And he bought the 200 EMA down here at 176.50. All right, check this out, guys. And again, everything we do is based on technical analysis, and our 200 EMA is the strongest of our technicals. This was at 176.50, and the stock's up $5 from that. There was your support level. Beautiful, beautiful trade, up $5 from there. Tesla, UPST, a lot of traders buying Walmart. Well, more of them are selling it today, which kind of gives me a mixed signal about the. I know you were talking about the strength of the consumer, right?
Well, we're going to be talking about it with, we're going to get some more data. Like, I mean, it was just something that I like joking about, like, oh, like getting on this packed flight, like, oh, I guess there's not really a recession, whatever. But it's like stuff like that doesn't matter. We got to look at the actual data. But so far from what it seems like, it doesn't seem like demand is falling off a cliff or anything like that so far.
Look,
so
Walmart could be a one-off based on their earnings, usually. But we see a giant stock like Walmart, right? Yeah, they had mixed earnings and a bad call. It's amazing to me that the overall market is acting as well as it is with Walmart down. What is it down?
Well, I'm surprised by that too, because so Home Depot reported first and reported very strong and actually increased their outlook, or its outlook. And then Walmart reported after that and basically the exact opposite. And I thought we would see a complete reversal of all the futures and everything, but we really didn't, which I was surprised by. And so I'm with you there, David. I would have thought that Walmart's poor earnings and the things they said I thought that would have a bigger impact to the downside in the market than it ended up having, it looks like.
Yeah, and again, I just think we're having a nice big relief rally. And I'm not going to call this a bear market because we were never in. We weren't down by more than 20%. But you're going to see these vicious rallies at times in markets when things aren't that good. And I think that's what we're seeing right now. I don't think we're out of the woods by any stretch of the imagination. I think we're good on interest rates. We know what they're going to do. I think Russia is a big wild card now. And, we'll see what happens from there. But even Home Depot, all right, look, when it announced its earnings this morning, I mean, it gave up all its gains and then some. Right? I mean, this stock went down, 20 points from its highs this morning after they announced earnings. So, I don't know. I don't know if the consumer's strong, weak, or whatever. All we can do is trade on the stuff that they put in front of us, right?
I would just add that this is like the worst day for Walmart in a very, very long time.
Yeah, let's take a look. I mean, what's it down percentage-wise today?
It's down 9.7% today.
That's gigantic. You know what kind of market cap you're talking about being shaved off this thing?
I know, and even in March 2020, it never came close. It never came close to a day that was that bad. I'm trying to look and see when the last time they had a day this bad was. I honestly, it's been years.
Yeah, here it is. Here's my monthly chart. Right, we're going back 5 years. It has never had a day this. I mean,
you got to go back.
This out, guys.
Yeah, you got to go back further than that.
Yep, we are sitting on a monthly level right now. Check this out. My 30 EMA on the monthly level is exactly at 134. I don't know if it's going to hold or not. What I usually like to do in these stocks is if we can get 2 more down days, the old third day rule, right? If you get 2 more down days, I'll look to stop buying it. And 118 is a gigantic level on the monthly chart. But we're sitting right now exactly on a monthly level. So let's see what happens from here. If we can hold around this 134, 135 level, maybe you get a bouncy. 118 to me is a good spot to be an investor. So we'll see what happens in that. But yeah.
Oh, you know what? 2020 here, you know what it was? I think it was February 2018, actually. Let me see here. February 2018, there was a day.
Let me see. I'm in 19. I'm in 18. Here it is. I see this.
Yeah.
Right there. Right. We went from 107 to 90. So down 17 points.
Yep. That's the last time
it's probably about the same percentage-wise. That might even have been a bigger percentage. Yep. The stock was lower.
Yep. February, it looks like February 16th. We went from 104, almost 105 down to 90, 94. Yeah. So, yeah. Anyway, it's unusual for a Dow component, a stock like Walmart, a stock as stable as Walmart is, to have a day that's this red.
Yep. So, and the market doing the exact opposite.
Exactly. Usually you think, oh, major Dow component down almost 10%, may drag the whole market with it. Not so much today.
Not yet. The way this market's been going, right? Who the hell knows? At 10:45 this morning, you know, it looked like we were going to start really adding on to the losses, and we completely reversed from there. Now kind of just hanging out in the middle of nowhere. D-Dog taking forever. Let's take a look. Yeah, I can't.
Good afternoon, blind trader. How we doing? Caesar asked, you're using the 200-day EMA on what time frame?
When we're looking at day trades, we're always starting on a 5-minute chart. So when I'm looking at 200 EMAs, it's always on a 5-minute chart to start. You know, and when you expand it to daily, weekly, monthly, they're even stronger when you get to those levels. I got in Walmart for a swing trade. I see it going back to 140. Okay, booger luck. So let's talk about that for a minute, right? What's a swing trade? Is it a week? Is it 2 weeks? Is it a month? Is it 2 months? Right now, the total V-shaped recovery so far intraday. We'll see how it plays out. So, you know, if you believe in Walmart and you like the company and you started a swing trade at 140, and again, is Walmart going anywhere? Walmart's not going anywhere, right? So it's one bad quarter. Sometimes it might take till the next quarter.
I honestly, it wasn't even like it was that bad. It wasn't great. It wasn't good, but it really wasn't that bad. In the grand scheme of things, there are bad quarters and there are bad quarters. This was like, this quarter was honestly, if we were in a bull market, the stock would be up today. Okay. I mean, it really was not that bad. Yeah, that came in a little bit light on the earnings per share. The guidance for the current quarter was just smidged on the light side, but I mean, they're still drowning in money over there. So,
yeah, I agree. So, you know, if you like, 126 is weekly, Ken? I'll check that out. Yeah, 126.25 is a weekly level in Walmart. I'd be an investor down there if we got down to that. Yeah. So we had a little bit of, I think we had a little bit of capitulation in the market last week. And, you know, how I know that is because all the pundits were coming on and saying we're going much lower from here. And, you know, we didn't get much lower from there. If we go to our longer term charts on the spiders, let me just show you. Here it was, the monthly. So this is where I started buying, getting back into the market a little, the monthly, right around 390 in the spiders. And we basically held it. Right, 390. We got a little bit below it. And I was hoping, I'm not hoping because I don't want the market to go lower, but 362 was my next level in the spiders, which would have been my next spot to get in a bunch more. We'll see. We'll see how it plays out. You guys think it's over? You think that was the bottom?
No. I do think we can definitely go higher, but like no. I just think it's just more chop. And maybe that means a little bit lower highs, a little bit lower lows along the way, but more chop. I don't see us going to new all-time highs anytime until something actually changes in the macro picture, which, you know, all bets are off on if that happens. But certainly we can go lower. I said that yesterday. I still think we can. Yeah, I think we will make a new low for the year again. I don't know when that'll be, but we will make a new low for the year again.
I agree 100%. Like I said, I've seen this happen. Yeah. Probably about 400 times. We got to at least test the lows that we just did, and I think we can go, you know, a little bit lower than that. And I've been saying for a week, we need some kind of resolution in Russia before we can really get things going. But also, you know, things have been adjusted now, right? Companies that don't make money, we've seen what happened to them, right?
Yeah.
I mean, it's just merciless for these companies that don't make money. So, you know, you got to stick with the good ones when things get like this. You know, we were talking about gave the green light to buy a little Google last week and a little Amazon. You know, these are companies that aren't going anywhere. They're going to be here forever. So that's what you look at. 380, I can see. David, can you think or compare Facebook from its earning 2 quarter back when the Facebook fall like 20% to the versus Walmart now? No, I think Facebook had some other things going on other than just their earnings that were involved in that, right? When everybody was really scared of this thing, the antitrust, there was a whole bunch of other stuff going on, and they're in totally different industries. So I don't even think you can compare them. Hello, Julie. How are you? Welcome. SoFi, guys, after their earnings, right? Yeah, it was about as bad as it could ever be. I think we traded at $5, something like that, when the earnings came out. I think stock's a little better now. I think it's all right long term. We'll see what happens with that one. JMIA. Now, we got to thank God for small favors, and the fact that we're doing what we're doing here is today is good.
How is Jumia? Jumia, oh, it's up to 7 now. All right.
Yeah.
Last week,
was another high flyer, right?
Last week it was at 4. Now it's at 7. Ah.
Yeah, their earnings came out. Man.
Sometimes catching knives can work in the short term.
Yeah, and I don't mind when you know your downside. You know, the stock was $5, right?
Right, exactly.
A lot of these things have had 9,000. Actually, we like UPST a little bit. I don't think they're going out of business, but some of these stocks, I mean, look at these stocks spent down from $400. I mean, Affirm, right? They came out with earnings, and I think it was a little bit better than they expected.
I mean,
but that thing got to $13.
Yeah, but now this is already this is red flag number 1, right? Is what was the post earnings high on that day? It was like 25.32, and the day after 25.45, and we've tried to get there like 5 times now over the last 3 days, and we haven't. So that's a red flag.
There's another company. They don't make any money. Right, so these are the ones that they've been punishing lately. The ones that don't make any money, they've been just absolutely decimating these things, right?
Yep.
GameStop and AMC. AMC came out with earnings, right? Hasn't done anything much since then. I keep reading stuff about all the beautiful things that AMC is doing, and you guys know how I feel about AMC. It got down to $10. I don't think that's
it's no.
Jonathan says, freaking Affirm. John, you're not alone. Okay. There are a lot of people that got caught in a lot of these things that just got devastated, unfortunately. You know, who would have thought that these stocks could, well, nobody thought 6 months ago that these stocks were going to do what they did after that. Zoom, I mean, we could look at 100 of them. Doesn't matter. Any thoughts after the morning beatdown? We didn't really have a beatdown.
Morning beatdown. Beatdown in what?
Yeah. I mean, look, from the highs to the lows, but this is normal. This happens in 5 minutes now, right?
Yeah, this is beatdown.
We 407 to 402. The market went down 500 points, but that's not a beatdown anymore.
No. That happens every single day. It happens every single day.
We've had more 1% moves in the last 6 months than we had, I think, in 20 years. So yeah. Told you, I'm doing this 35 years. I have never seen the market do what it's doing now. Never. Not on a day-to-day basis. That's why, you know, stick to your long-term stuff, stick to the good stuff, and it's a great market to be trading in. And that's it. I think D-Dog's taking too long to get up here now, guys, this 95.50. I mean, it would have been worth a shot if we went straight there, but we kind of backed off now. At what point did you say you're buying more back into the market? One day last week, Kat, I told everybody I was dipping my toe. I don't know if you were in the room or not, but I did.
Yeah, I mean, I still maintain if you're trying to do like some like short-term trading, or not even short-term. If you're trying to do like intermediate stuff, like, you know, several weeks, several months, now is probably not the best time to be doing that on the long side. Short side is a different story. Investing is a different story as well. But for like for the intermediate, like you know, let's say, oh, I'm gonna buy a thing and I want to hold it for like, you know, 3 to 6 months. Probably not.
I agree.
The environment for that. So,
I agree. And when we start getting a smackdown, just make sure you buy good companies. That's all. That are going to be here for a while. Ken, I got back into the market. I think it was around 398, 399 when we got back in.
Double Trouble wants your thoughts on, what is this one? HURN, Huron Consulting Group. This is a new one for me. I don't know this.
What is it?
HURN. So it's a mid cap. It's a consulting firm. I've never heard of it before.
I mean, the chart looks great, but you see the average daily volume in this?
Yeah, I mean, it's like
it's 300,000 shares.
That's why I haven't heard of it.
Yeah, exactly.
Can you explain why, in your mind, a volume of 300,000 shares is nothing? Because to some people that might seem like a lot of shares.
No, it's not, and I'll show you right now. Let's look at the. Check this out. Yeah,
I mean, 300,000 shares, $60 a share. That's a nice chunk of change. It's traded per day.
Yeah, it is, but there's no liquidity in the stock, and what I mean by that is it's very difficult to buy and sell a stock that has very little liquidity. Again, if you like this for a long-term stock and you're an investor in it, that's one thing. But for a trade, it's not something I will ever look at. And here's the thing: God forbid something bad comes out in this thing because there's so little volume. What if a big shareholder wants to sell, 1 million shares? You're in big trouble. So that's why I don't look at stocks unless they trade at least 1 million shares a day. But again, if you're an investor, it's a different story.
Why is 1 million but why is 300,000 shares not a lot to you?
Because the spreads will be bigger in a stock, and it's just not a lot of liquidity in it. That's why. So it's harder to get in and out of stocks that don't have a lot of liquidity. And it's just a rule of ours: I won't trade anything that doesn't trade at least 1 million shares a day for day trading purposes. I won't even look at it.
Dev is asking a very good question. What are the top 3 metrics to look at for understanding "quote unquote" good companies to buy? It's a little bit subjective.
It is.
But I would say and it's always changing based on the environment that you're in. So, for example, Dev, maybe 5 or so years ago, the answer to that question would have been revenue. It would have been even revenue growth. You could also have used I'm trying to think of some other examples.
About profitability.
So for today, though, like the environment that we're in, the market is looking very, very favorably on companies that make money at the end of the day, that don't just have revenue, but have actual earnings on their bottom line, and companies that can increase their margins and have actually positive free cash flow. So the
balance sheet. Balance sheet is usually important.
Right, but the balance sheet has a gajillion. Balance sheet has a gajillion numbers on it. So, like, just some numbers to have on your radar, and maybe we should do a show one day where we're actually go through all these one by one. But I would look at forward price to earnings ratio. I would look at EV to EBITDA, which is enterprise value to EBITDA, which is another really good way of valuing companies. I would look at their debt to equity ratio.
We need to do a whole show on like EBITDA versus EBIT, because I still get it.
Yeah,
I trust me, I get it, but like I couldn't teach it to someone, and that's where I need to get to the point where I can teach something to someone before I feel like I fully understand it.
Yep.
Yeah, me too. I'm in the same boat, guys. We concentrate on trading. Everybody has their portfolio, but that is a show. That's a week.
I know. We should. We really should spend like a couple of shows devoted to just going through the freaking balance sheet and the financial statements and how to read all that. I will say though, there are a lot of good free resources out there. If you literally just go on YouTube and search like how to read a balance sheet.
Yeah, absolutely.
You know who unironically has some really good videos on this stuff is Martin Shkreli. Martin Shkreli, the guy who went to prison for price gouging.
What? You're trying to say good things about Martin Shkreli right now?
I'm saying, actually, yes. Unironically, he has some real, and the problem with his content is it's like 6 hours long, but like he used to, when he was not in prison, do these streams where he would like literally take you through his thought process and how he valued a company. But Andy O says that's his boy's cousin.
Who's
free shekel, baby? Free shekel.
Andy Martin Shkreli. Andy, I think you're lying, and if you're not, prove it.
For some weird reason, I was literally like just on a Wikipedia hole about Martin Shkreli's like life the other day. He actually had like a pretty interesting like career, but I think he always, even like from a very young like investor, was always like doing some schemy shit, like always thinking about like how he could scheme the system.
Yeah. Okay, so just to put a bow on, and we'll
He's just
do more on
misunderstood.
this, but just to put a bow on the actual question that got us down this rabbit hole is forward price to earnings. Anything, I'm gonna just say, all right. So, what's an arbitrary line to draw here? You know what? Let's pull up what the forward PE of the S&P 500 is, and then we'll use that as our bogey. So the forward PE of the
18,
SP
19,
of the
17?
SPY is, if you give me like a second to find it, it's going to take me a minute here because I'm looking and this page doesn't have what I want.
It's between 15 and 19.
So historically, it's closer to 15. I think it got to 25 last year when things got a little bit crazy. We'll just call it. We'll split the difference and we'll just call it 20. How about that? It's probably closer to 15 now. So let's just say it's like 18 right now. So anything with a forward price to earnings below 15, it's quote unquote considered maybe undervalued right now. Anything with a high price to earnings, 50, 60 above, be very cautious of. Forward price to earnings, enterprise value to EBITDA, positive free cash flow. And then the other thing that you can do is, and you can do this in Benzinga Pro, I'll show you, it takes 2 seconds. You can go into an earnings calendar. I'll bring it up on my screen. You just go into here. Let's pick a stock.
Not having a lot of debt is a good thing also.
Yeah, debt to equity. So we're talking about a firm, right? We can look at a firm. I'll bring it up on my screen here. Give me 1 second to get that open. And hold on. Why aren't you doing what I want? Give me a second. There we go. No, it's not working. There we go. No, still not doing what I want. For some reason, I can never get the date ranges correct on my pro calendar. But here, okay. So Affirm, here we go. This is every single Affirm report in their history as a public company. They've only been public for a year and a half at this point. But something you can do very simply is, all right, is their earnings per share and their revenue going in the right direction? Right? I.e., is their revenue growth rate increasing? Is their earnings per share not getting bigger? Okay. Is it getting smaller? And you can see here that in Affirm's case, it actually did get smaller in their most recent report from last week. But you can see it actually was widening in the few quarters before that. So just, are their earnings going in the right direction? Are they getting towards break even? Are they getting towards profitability? If they are, then that's a good sign. And if they're getting wider, not a great sign. They're going in the wrong direction. So something you can do is look at that. It takes 2 seconds. What else do we have here? Bring David's chart back up. Lineage says, how about Shopify? You can look at Shopify real quickly.
I had a really bad day yesterday. I was looking at that yesterday. Hold on 1 sec. You're shorting a small coin here. Why? Why are you shorting coin, Eric? It's not a far from moving average trade. It's not in any moving averages.
All right. So Lineage asked about Shopify. Take a look at this. All right. Shopify. Look at the EPS. All right. Going in the wrong direction. Now, this is a COVID play. They benefited greatly. Shopify benefited greatly from the pandemic. Everyone knows this by now, right?
No, he's right. Double top.
Okay. So anyway, as I was saying, you can see all the business that they gained, all the earnings that they got from the pandemic have come off now. Look at the earnings per share. You had this huge spike in 2021 and now a huge drop off these past few quarters, okay? That's not what you want to see. You want to see earnings per share going up, not down. That's what I was saying. All right. 12:07. David Green, any final thoughts for us today? Wait. Pritam is saying SPY was halted? No, I don't think that.
SPY was halted? No.
I don't think that's true.
That is not.
That is not.
Well,
that is
It's
not.
happened before.
Not.
Probably
It
the
has
last
happened
time.
before, but
Probably the last time was during the COVID crash. Where we
yeah, that's
I-
happened a
open
couple of times.
limit down at
Spy-
7%. You remember those mornings, David?
Spy was not.
Yes,
Spy was
it happened
not
a couple
halted.
of times. Yes,
What were you doing during those 15 minutes?
Oh God, it was
getting
brutal.
ready to buy.
Okay.
Oh gee, dear Lord,
That's why I love you.
dear Lord. You know what? It was like it was 3 Mondays in a row.
I know.
Right? It was like every single Monday for 3 weeks, and you're like, oh crap, it's gonna be a bloodbath out there. And then you literally, the market would be open for like 2 seconds.
Yeah.
Yep.
It was like
And
the
then
one
boom.
time where the thing that everything expected to happen actually happened instead of the
That's right.
opposite. But I felt bad because I remember I would like get up early because at the time I was still in Missouri, so it was Central Time, so it was like 8:30 instead of 9:30 when the market's open. Pretty early for me.
Yeah.
So I'd get up early to get my coffee, and I was like actively buying puts and shorting the market at the time. So I'd get there. I actually felt a little bad because like everyone on CNBC and stuff would be freaking out, and I'd just be sitting there like, let's go rooting for this while all these other people are freaking out. And I was like, yeah, it's kind of fun to be the short when everything's going to shit, but not if people are actually gonna like, lose their retirement. So I don't know.
Yeah, but they're not gonna. And you don't lose anything until you sell, right?
True. Very true.
That's true. All right, David Green joins us every single week. If you want to learn more, check out his site that I'm putting up on the screen right now whenever I can find it. There it is, WSGT.com, Wall Street Global Trading Academy.com. And David, we'll catch you again next week. We have oh no, never mind. I just jumped the gun there for
My
a second.
pleasure,
All right,
guys.
catch you again next week, David.
All right,
What I was gonna say was we have a short week next week, but that's not true. We have a short week in 2 weeks because of the holiday. Don't forget. All right.
So if it's, I just want to. So it seems like I was a little distracted there. So I threw a tweet out there that
What were you doing?
I didn't really think much of it when I threw it out there. So let's see. Which I'm getting this guy who is, I think he's gonna come on the show. I don't know yet. I don't want to butcher his title. He's something that.
Definitely get his title right before we.
All right, let me get this guy's title right.
All right. Well, while you do that, what was I talking about? William, why don't you shoot me like a DM on Twitter or something? I'll put my handle up on the screen for you. Everyone is feel free. My DMs are wide open. Do you guys want to ever DM me? Shoot me a thing on Twitter. That's my handle right there on the screen.
So Robert McCauley is a economist. He writes for Financial Times. He works for.
So far, so good.
Wait, hold on. Let me make sure.
So far, so good.
Financial Times, and he basically called the collapse of these stable coins. And
lots of people.
Lots of people did, but he laid out I don't know. He's been essentially as an economist, a long time bear of crypto. I think we're gonna get him on, talk about his view from it, just because I feel like we got to get some opposing viewpoints. I don't know why Financial Times is not listing his title. Anyway, I responded to this tweet earlier, and actually, so Billy, I don't know his real name, Billy M2K on Twitter, who's the guy who created Dogecoin.
He's the Dogecoin guy. Yeah.
He's actually been a very, I would say, good. He's not super bullish crypto to the point where he can't be critical of it. He's very critical of kind of these sham projects, NFT things that he doesn't like. But he tweeted that said, note that people who say all cryptocurrency is a Ponzi are using the same amount of no-brain as people investing in obvious Ponzi scams. There are tons of scams in crypto, but price going down doesn't mean scam. Fake promises are scams. Markets are markets. But Robert McCauley's point, who again I think will be getting on the show in the next couple of weeks, and you can read more from him on Financial Times. His point is that whether there is real utility or not in crypto, which to me that real utility is being able to send someone money, not maybe anonymously, because we've found that that's maybe not the case, but maybe more anonymously than traditional banking measures, but also just like there, it can be very hard to send someone money if they're in a certain country or certain ways. And we saw that with, GoFundMe and stuff like that, shutting down campaigns to certain people. This can be a way that people can really get money to people without an intermediary getting in the way. But I replied to Billy's tweet saying, but even the cryptos that aren't Ponzi's, Bitcoin, Ethereum, etc., rely on increased demand to raise the price.
Yes.
Unlike stocks, cryptos don't have earnings, and price going up is 100% contingent on more people buying, which is fundamentally the same thing as a Ponzi scheme. He said, which this is where like things got interesting because I didn't really.
I'm sorry. Was this just now?
Yeah.
Okay.
This is why I was distracted.
Yeah.
I didn't really expect him to respond.
Yeah.
I just kind of wanted to throw that out there in the ether, and maybe like some people like.
Pun intended.
No.
Okay.
But good. Yeah, sure.
Okay.
But like, when you click on a tweet, that sometimes like you'll see someone's reply in there. Like I was just trying to be a reply guy.
You just want to be a reply guy.
Yeah.
Got it.
But he replied and goes, no, that's not how things work. Everything relies on people buying the item for it to go up in value. Earnings don't make the stock go up. It has to be purchased for a higher price, which I agree with. And Tim Quast would agree with. I go, right. But strong earnings will increase the demand for people to purchase the stock.
Can I try to play? Is there more here?
Yeah. There's more.
Sorry. Okay.
There's more.
There's more. All right. Keep going.
I go, right, but strong earnings will increase the demand for people to purchase the stock. So there's something underlying that drives demand, whereas with crypto, it's just the idea of it and getting more people to buy into the idea. And then he said, demand comes from speculation and utility. And then he said, here's where he maybe is getting a little bit snarky, but I think we have a really good rapport after this. He said, you got to step A, cryptocurrency is not a stock. That's good. That's better than 70% of people in the space. Step B is it's still a market. I said, I think we agree more than we disagree. Supply demand is what drives price action in stock market, but my point was that there are underlying fundamentals with stocks that help drive that demand. Demand comes from speculation and utility. I would put that in quotes because that's what he said. I said, that's my point. Hold on, I gotta load this tweet. The speculation has been that there will be more and more adoption of crypto, thus increasing the demand. But the utility has largely changed from a new way to send money to someone to a way to get rich quick. Crypto has legit utility with the former and not the latter, in my opinion. And then he said, we do mostly agree, but you're basically saying that the only utility is speculation, which is untrue. It is the primary utility, though. And then I said, I just said that I believe that crypto has legit utility as a way to send money. But right now, with the way crypto industry has developed, I do think the main utility is speculation, and crypto will be stronger when that changes. He said, right, so if you believe that, your initial statement is too black and white. I said, that's fair. You are right. I don't think it's
How
correct.
many freaking DM? This isn't DM. Sorry. How many replies?
This is the last one. I said, I don't think it's correct to call Bitcoin a Ponzi scheme, which I did in the first tweet, but instead that it acts like it when the main utility became speculation.
Okay, that's fair.
So essentially, because crypto evolved from this like new technology for a way to send money to people saying, oh, I can invest in this and make money. It became speculative driven, which in large part makes it act like a Ponzi scheme, whether there's real technological utility or not. I believe there is, but it doesn't matter if it's in practice acting.
Yeah.
As
so
a Ponzi scheme.
Here's what I think also, like the point you were trying to get across, which was in the stock market, there is an entire not insignificant portion of the investing world that are quote unquote value investors. These people will basically are slaves to the numbers and will let the numbers determine whether they should buy something. If at a certain point a stock falls enough by some arbitrary number, according to these people, and they have this company let's say has enough earnings, a certain amount of earnings, and the stock price is cheap enough, these people will buy it. There are value investors that will come in, even if the stock is down 90%, if they determine it's got enough earnings, it's got enough whatever, they will buy this stock. There is no whatever, there is no earnings or anything to justify buying any cryptocurrency at a lower price other than you think it will go higher. But there's no earnings behind
and
that.
I will say,
right?
to that point, we saw, during 2020 or after COVID, basically speculation took over the stock market. And
Yep.
it was the same thing where it wasn't. And with the way like GameStop and AMC was trading, the same way Bitcoin is. It's reliant on more people buying it for no other reason than just the fact of the speculation that it's going to keep going up.
Yep.
They're not buying it for the underlying,
Right.
earnings of the company or whatever. So in that sense, even stocks can fall victim to that, where they're performing based on solely on the speculation. Because even with value stocks, there's going to be they're speculative assets at the end of the day.
Yes,
There's going to be a mixture of speculation and the earnings.
Yes.
But what we saw with GameStop, AMC was fundamentals went out the window, all speculation. And what happens? Goes all the way up and crashes.
So sometimes when stocks are crashing, you get this belief that, okay, like eventually value investors are going to come to the rescue. Eventually, there's this entire room over there of value investors, and if this thing gets down to $10 or whatever the heck, they're going to come in and buy this because at that point there's value there. There are no value investors for crypto; they don't exist. You either think it's going higher or you don't, right? So the idea is that there is no one to back up the truck at $10,000 in Bitcoin. I'm just throwing out a random number, right?
But all in all, honestly, like from me essentially calling like crypto a Ponzi scheme to this guy who's like a big player in the crypto space, we had a very like good conversation.
Well, we've had him on the show before.
Well, we not on our show.
No, we've had him on.
Like trivia, right? But that's what I'm saying. It's like I would love to get him on our show, talk to him more about it. I would love to get.
He seems like a very chill dude.
Yeah, and that's why I sent it to my friends. Like, oh my god, it's crazy. Like I was like, nah, he's actually the homie. Like he's a.
We definitely had him on one of our shows.
Right, one of our shows. I'm saying,
it wasn't this show. I forget what show it was.
I think it was a trivia segment that
I don't even remember anymore.
Alyssa would know.
Maybe.
But that's what I want to do. Like I want to have these conversations because I think even with Billy and I, who it seemed like we disagreed fundamentally from the get-go, by the end of the conversation we realized we really agree about more things than we disagree. And that's like I said, like Robert McCauley will probably have a very, very, very different view on crypto than 99% of the guests we bring on, but I still think it's worth it to do it.
Yeah, I agree. Some people are never going to get past the idea that, like you said, at the end of the day, crypto, you need people to come in after you to drive the price higher, and that's what that's the driver of price. For some people, that's not enough, and that's okay. Then they cannot buy crypto ever, and that's okay. You don't have to. You don't have to buy crypto to have a good portfolio or make money. And that's what held a lot of people out, I think, of the crypto market for a long time. You and I have gotten past it, I think, because you and I both own some crypto, and that leaves us to today. So, but isn't it interesting now? Bitcoin, how old is Bitcoin? What, 10 years?
14
years?
Also,
and we're still debating this.
Yeah. I don't know if this was from Macaulay, but I know our next guest is here, but this was the last thing. There's part of some of the critiques I was reading about Bitcoin recently. There's this, the story is that Bitcoin was created in wake of the 2008 financial crash.
Well, the timeline checks out.
But this guy was asserting that it really does, like like Bitcoin was launched at like some point in 2008, but like shit hadn't really hit the fan yet.
2010 or 12.
What?
Until
like no shit like it was like before like Lehman blew up, it was like before shit hit the fan, and they were like, all right, and if you assume that they didn't do this like the night before and it took a couple months, the timing
they did it the night before.
The timing like actually lines up with a lot more of like online gambling stuff that came in like 06, 07, 08 than it did with things that came in after the financial crisis. I'm not saying I think one way or the other. I was just like, I've never heard that
I don't know.
Take theory, conspiracy theory, whatever you want to call it before.
Don't know. All right, let's see if we can get him on the show. Our first guest is we're going to bring him on in a couple of minutes here. Shachar Daniel from Safety, and then after Shachar, we're going to have Mark Manduca on the show. Man, we got a jam-packed show today. Followed by Mark Manduca, we'll have Dave Mazza from Direxion to talk leveraged ETFs, when you should and when you should not buy them. Christian Fromhertz is on the schedule today. We're 1:15. Have we confirmed with Tim Quast?
I have not, but I can go ahead and.
Okay. Well, here's the thing, though. I almost think we should punt on Tim.
Okay.
Because I have a special video that I want to play at 1 30 or 40 or so. So we got a lot going on today. Just as a PSA, guys, no Benzinga live tomorrow. Just tomorrow we have our monthly Benzinga boot camp. It's basically a full day of education where we take a lot of the smartest people that we talk to, and we just say, hey, come on our channel and give like an hour-long seminar, essentially. Seminar is a very boring word, so what's like a better word for seminar? Session. I don't know. Whatever. And we do like a half dozen of these sessions, jam-packed, back to back to back to back, once a day, on one day, once a month. So that one day is tomorrow. So what's going to happen is we'll do pre-market prep as normal. We'll do live trading as normal. And then at 10:30, we're going to be going into our boot camp for about 4 hours of education content. And actually, a lot of that is fun. Not all of it, but some of it is fundamentally driven. So you're going to hear from people who do fundamental analysis tomorrow on how they research stocks. And we have some technicians. And if you want to see the schedule, go to benzingabootcamp.com. But it'll be right here tomorrow at right here on this channel. So.
Yep, someone just asked for the schedule of speakers tomorrow. I'm dropping the link in the chat.
Yep, drop it in there. It's benzingabootcamp.com, but he just dropped the link in the chat.
Well, I did benzinga.com/event/bootcamp.
Oh, okay. Either way. Okay, we still have to talk about the whales, the hedge funds, the hedgies, the 13Fs. We still got to do that. We will. We also still have to talk about the SEC did a thing today. They did a big thing. SEC just dropped a hammer, which you don't see very often. They dropped the hammer on a financial firm, Alliance. We'll talk about that after our next guest. However, I do think it is time for our second guest of the day. If I can bring him on right now, I think there he is. Shachar Daniel, the CEO of Safety. Let's give him one of our special intros, I think. Which one should we give him? Doesn't matter. I'll choose. Shachar Daniel, welcome to Benzinga Live. How are we doing?
Thank you very much. What an amazing intro. Exciting.
Hey, we made it just for you, my man. All right. So for people who don't know, what is Safety Group? What do you guys do?
Okay, Safety Group is, first of all, thanks for having me. It's my pleasure to be here. So we are a cybersecurity and privacy company based in Israel, group of veterans and experienced cybersecurity guys from the Israeli cybersecurity ecosystem, companies, and intelligence unit of the Israeli army. We are developing and selling cybersecurity products for consumers and organizations, which is a very unique approach. As mentioned, based in Israel, our products were basically designed to protect against the huge spike in the cybersecurity threat all over the world for consumers and organizations who are selling our products globally.
The reason we got in touch in the first place, Shachar, was because of you recently published your annual shareholder letter. Can you just go over the highlights? What was in that?
Yeah, so basically, investors that are following us, or audience that are following us in the last years. So we started as a cybersecurity company for organizations selling cybersecurity products in a perpetual model, meaning one-time sell, and then we enjoyed or bear fruits from customer for maintenance and support over the years. In the last 2 years, we recognized two trends. One is that the consumer market, the consumers basically, which is me and you as a consumers, are totally naked. All the world is wanting to protect organizations, but the consumers are still naked, and the threats, the amount of threats is endless. Just to give you an example, last year, 48% of US citizens reported on a cybersecurity threat, meaning if it was successful or not, but cybersecurity threat, which is an amazing number. So we recognize this trend, and we were very excited to penetrate to this market. Second, we moved from a perpetual model to a licensing model. No more one-time payment. All our revenues based on subscription. In this way, we can plan our revenues and budget for the next year. We can have a stable growth, and you can see the numbers that are growing dramatically based on our penetration to the cybersecurity, to the consumers market, and to remote access, which is a huge threat for the world today.
I'm just trying to understand. So it's a consumer-based product that like Aaron and I can use.
Of course, absolutely, I would recommend you to use.
So what is it? Just software that we download?
So it's a software that you download. At this stage, we released only one product and one flavor, meaning it's a privacy product for your mobile, for the iOS. We are planning to release this quarter and the next quarter, we are planning to release 3 more products and 3 more flavors for desktop and Android, which is basically you can download very easy, 3 clicks, and you are protected from cybersecurity attacks on your mobile on desktop, and you can protect your privacy when you are browsing online.
So it's mostly a privacy protector, is what it sounds like to me.
Yes, privacy and cybersecurity. You know, you have ransomware attacks, identity theft attacks. You know, the amount is endless.
Can you explain? So it's on mobile. Can you explain like how? Obviously, the whole world has gone mobile in the last decade, anyway. But I'm just wondering why you chose to go that route and just the need for mobile-based. I've never really heard of, that I can think of at least, of many mobile-based security products.
No.
At least that are consumer-facing.
Okay, so basically, yes, the mobile is here, and I guess that you spend often most of your time, like all of us, in your mobile. So basically, we have 2 flavors for mobile and desktop. We didn't choose to go only to mobile. We started with the mobile.
Got it.
From some reasons. But yes, you download it, 3 clicks, you have a protection on your mobile, on your privacy in your mobile when you are browsing the internet, and of course, from the online cybersecurity, by the way, from alerts, like someone, when I just opened now, by the way, your link, I just got an alert from my product that say, your camera is online, be aware, someone might watching you. Your microphone is now turned on.
I'm watching you.
Someone might listen to you.
Yeah.
So this product give alerts and protect your privacy and from cybersecurity threats like viruses, ransomware attack, identity theft, which is a huge threat on the world today.
And then can you just outline what the demand has been like in the last, I don't know, really, I guess, let's just do it in the last year.
So I can say very proud that as a company, we started in 2018 with $1.4 million in revenues. And we finished 2021 with more than 10, and we finished the first quarter of 2022 with around $4 million. Imagine yourself the run rate, imagine yourself the growth, and I can tell you that the demand is higher than the inventory, meaning we cannot stand in the demand that the market needs. So, especially due to the COVID, the world become more and more digital. You are working from anywhere to anywhere. Employees need to connect remotely to their office, need to demand the application for the office. You are traveling abroad, you are surfing the internet from the airport, from coffee shops, by unsecured Wi-Fi networks. A lot of threats all over. The legacy boundaries are not existing anymore. In the past, you know, you woke up, you went to the office, you connected, then you disconnect and went home. Now you work from anywhere and you connect to anywhere. And it's running so fast, the digital process and the cybersecurity stay away behind. And here, exactly in this gap, all the hackers came in. That it's a huge celebration. The amount of attacks is endless, and the demand is also endless. And
question from the chat: what's the name of the app called? What's the app called?
The name of the company?
You know, the app. I mean, that I can download it. Yeah.
The app. So it's called Armo, ARMO.
Okay.
It's the privacy, and the app for the desktop called iShield, I-Shield.
Armor and iShield. There we go. Shachar Daniel, the CEO of Safety Group. Thank you so much for joining us briefly today.
Thank you very much. I appreciate the time. It was a pleasure.
All right. As I said, guys, we got a lot going on here. Also, what's going on with this table next to us, man? It's like I'm up against it.
Oh, it's because I put it back today.
Oh man, so much going on here. I'm bumping up against
it. Used to be in the past.
Trying to move in the shop, and I can't move, and I'm stuck in my chair. But
I fixed it. Everything's okay.
Thank you. You fixed it. Okay. Appreciate that. Okay.
Also, Billy responded again to me.
We'll talk about that after our guest. We have Mark here? Do we have Mark?
We do have Mark. We got Mark Manduca. He is the Chief Investment Officer of GXO Logistics, a regular guest on CNBC, Bloomberg, and we're lucky enough.
And on Benzinga.
Well, yeah, I mean,
Yeah.
that goes without saying. That's which is his favorite of the three. But
should we give him a different special intro?
yeah, let's give Mark a special intro. We're going to talk real quick about GXO's earnings that came out last week. We're going to talk overall supply chain. We're going to talk consumer spending and some recession risk.
Recession risk.
Does that sound good to you?
Don't tell me. Don't use the R word on this show.
Well, maybe. Mr. Manduka, how you doing today?
Hey guys, great to see you. Did someone use the R word?
He did, not me. I would never. I would never.
Thank you for the intro. Love it.
You're welcome. All right, Mark. So before we get going on what's going on in the supply chain and consumer spending and everything, I just want to talk real quick on GXO's earnings that came out last week. Pretty strong, huh?
Yeah, really good. Double-digit organic revenue growth in Q1. Massive pipeline, $2.5 billion of pipeline. We're growing that at roughly around 20% year over year. There's persistent strong growth in e-com as well. And you've got this huge demand for our services because remember we spoke last time about these massive secular tailwinds in our business of automation, e-commerce, and outsourcing. That's just playing out within our pipeline and within our new wins. So we raised guidance for the full year. We're now doing 11 to 15% organic revenue growth and 29 to 39% EPS growth. So we had an upbeat quarter and things are looking good.
Yeah, and I guess, Mark, I should have started by asking you to give just a brief rundown of what it is that GXO does for maybe some of our audience who wasn't here the last time we had you on the show.
Such a good point. It's such an easy business, this. Our job is to basically move goods of our global blue chip customers through the warehouse faster, more efficiently than anyone else. And our plan is basically, therefore, to improve accuracy through the warehouse through our customers. So we manage basically 900 warehouses across 28 countries, operating for about 1,050 global blue chip customers. So that's the name of the game, being efficient in the warehouse for the customer. And as you said in your opening remarks, managing the supply chain for our customers. We're in the box, but it's such an integral portion of the supply chain.
So maybe not like because I know Amazon does a lot of their stuff internally, but so say I'm Callaway Golf and I need to get my golf clubs shipped to Spencer, who's out in California. That's where GXO comes in, finding out the best way to get those golf clubs shipped out to California.
Exactly that. Making sure that we can get when it arrives in the warehouse, it goes through the warehouse efficiently. Making sure there's a huge accuracy to it. If you're doing this yourself, you're probably getting 85 to 95% accuracy. We're doing it to 99.9% recurring.
Wow. And then are you at liberty to say who some of these big blue chip customers are?
Yeah, we've got the who's who on our Capital Markets Day. So if you go to the website, we put out a list of our global blue chip customers. In our Q1 results, we put out our new wins as well. But I would hasten to add that if you basically shouted out some names, and you have done already, one of those were a customer of ours, the reality is that you'll probably end up hitting 1 out of 2, 1 out of 3. It's that global and it's that widespread what we're attracting here.
But GXO, I mean, hasn't been around that long, has it?
So GXO is the amalgamation of a number of different acquisitions that took place between a business called Norbert over in Europe, all the way through to New Breed. We bought Menlo, which came via Conway. There was Jacobson as well. So it's been an amalgamation of different businesses, which in aggregate have been around for over 30 years. So yes, wow, is the answer.
What, Mark, what are you seeing in terms of volume in the last, call it 3 months and the shift there?
I'm a big fan of your show, and I've been seeing a lot of talk about slowdowns. It's almost like we're kind of almost sleepwalking ourselves into a slowdown right now. If you look at your well-attended show and obviously what you mentioned in terms of some of the other TV shows out there. And for me, it's more of a mixed bag. I would always sort of pin down the risk of a slowdown and what I'm seeing out there into sort of 3 buckets. 1, consumer demand. 2, labor availability. And 3, the ability of the government to stimulate the economy. And the obvious one to focus on is obviously on the consumer side. And like I said, GXO saw relatively strong and robust volumes in the first quarter. But since then, and Aaron and I were speaking about this earlier, we've seen a number of differently publicly available sources and data points suggesting that consumer retail spending, which is basically the engine of the US economy, is still going very strong. So in fact, what you saw this morning on the tape was that retail sales in April were up, I think, for the 4th consecutive month. So that's clearly a positive. Then on the labor side of things, clearly you've got a situation where there are ample jobs. You know the statistic, obviously, of 2 jobs available for every 1 person. So that's a positive in terms of bargaining power. And then there's tons of stimulus coming in from governments that's hitting Main Street as well. So I see a lot of top line positives out there. The only question is when is the cost going to bite, the inflation risk going to bite in the market?
So I don't know if this is too simple, Mark, but would you say, as someone who is in tune with what's going on in the supply chain, how consumers are spending, is it fair to say that maybe some of this R word being talked about out there is a little bit overblown right now, or do you think it's a legitimate worry?
I think in terms of it being overblown, I think people obviously do what they do in the stock market, which is look 6 months ahead. But like I said, consumer demand looks relatively strong still, and it's definitely not perfect across all regions. Clearly, Eastern Europe is slightly worse than what we're seeing in Western Europe, which is slightly worse than what we're seeing from that strong US consumer. But the question really is when does the pinch bite the consumer? This inflation concern that you have out there, and it comes in a variety of forms. It comes in the oil side of things, so energy in general. It comes on wages, and it comes on food. That's the thing that the market is trying to get its head around. And at the same time, it's dealing obviously with a Fed that's wanting to raise interest rates. And you put those 4 forces together and you have the debate of whether there's going to be a second half slowdown. But all of those 3 in particular, energy, wages, and food, are really the key debate, I think, in terms of where this wallet is going to get crimped in the second half of the year.
So we've touched on the demand side, right? That consumer demand has, by all metrics, looked pretty strong. But right now, obviously, a lot of what we're seeing in terms of inflation is coming from the suppliers, supply chain. Have you seen any, I know I asked you this last time we spoke too, has the situation with the supply chain overall improved from where we were 3 months ago, the last time we spoke?
So if you look at supply chains, I think there's a couple of things to keep in mind. I think there are parts of the supply chain that are clearly improving at the moment. If you look particularly at the 2 big buckets, you have Russia and you have Shanghai. On the Shanghai side of things, clearly things have got better. There's no question about that. We're beginning to see signs of easing there as throughput has got upwards of around 80% more recently. And the easing that we've seen started at the end of April. But don't doubt that the logjam that exists in Shanghai from the prior months could still tail off until the end of this year. It doesn't just all of a sudden disappear because you're putting throughput through. So I'm comfortable about what's happening in terms of an alleviation out of the East, although there's still a long way to go. On the Russia side of things, I think it's still very strained. I mean, going into the crisis back in February, more than 600,000 businesses worldwide relied on some form of Russia or Ukraine suppliers, and therefore that's everything from oil, gas, wheat, corn, seed, and iron. And don't doubt, therefore, that there's concern if that continues, say, for another 6 to 12 months, we're going to see continued strained supply chains across the network. So I don't know how long the Russia crisis is going to last for. I don't think anyone does. But Russia's where I would still point to in terms of the area of the most fray and the most concern.
Got it.
That's fair.
I'm opening up the question of some chat, seeing if we got anything. We've got one guy saying that he's in trucking, and he's saying that he's been slow as hell. I don't know, I guess, where the difference would there be from what you're seeing and what he's seeing.
So, I mean, to keep it simple, we're 900 warehouses. So the vast majority of our profits come within the box. So we're not necessarily exposed to the same market as the question came from. But let's be clear, the market overall is stuck from a logjam starting all the way in the East and in Europe, all the way through to the West, and that affects all different parts of the supply chain. The answer is very simple, and this is where we're seeing a lot of companies coming to us and customers, as you mentioned at the start, wanting to do one simple thing, and that is to automate more. And this isn't necessarily on the trucking side, this is within the warehouse in terms of robotics. We're inundated with customers wanting more and more technology in their warehouse, because if you take simple things like robotic arms, automated gantries, vision technology, you're getting multiples in terms of efficiency, and that's really where the reaction is from our customer base. That's really where we're seeing customers coming to us and saying, we can't deal with our overall supply chain. Can you help us in the warehouse? And most importantly, can you bring us tech with all the knowledge and proficiency that you've gathered over the last 30 to 40 years? So that's a conversation that we're having from a lot of first-time outsourcers.
Got it. And I'm curious real quick with just what you mentioned with these robotic arms and whatnot in the warehouses. Are there any companies that you guys are working with providing these, this AI technology, robotics, that it's like, wow, these guys are really killing it, or we love working with these people. Next time we need to do some automation work, we're going back to them and not to this other company?
So there's lots of videos that you'll see on YouTube that basically show the wares that we use from a robotics side. We're working with the absolute who's who of the robotics world. We're trialing over 100 different technologies at any one moment in time. And you mentioned robotic arms. They're doing 6x what the human hand can do. So you turn a warehouse that's doing 50 picks per hour into a warehouse that can now do 300 picks per hour. And all of a sudden, there's FOMO being developed amongst the customer base, where everyone else is seeing that someone else has got the new snazzy technology. And therefore, what you're getting is an inevitable arms race towards scalable third-party logistics providers such as my team. And then on top of that, companies that know how to use technology in the warehouse and integrate it accordingly.
Interesting. Yeah, I just know that's one of those spaces that I've always been interested in, like, investing in, but it's one of those that's so early where it's like, oh, I might need a few years to figure out who's going to be the winner in this robotic space.
You're so
Mark,
right. In terms of the point of being early, you're totally right. We are literally in the foothills of the Himalayas of this. If you think about the industry, it's basically 5% automated as a warehouse industry right now.
We're just now throwing out the first pitch, huh?
We're 30%, exactly. First pitch, early days.
You also mentioned kind of what's going on. We obviously have supply chain issues from the war in Ukraine and Russia, which I don't think a lot of people foresaw, 5-6 months ago. We have China, which I believe you mentioned, or at least the East, which China, similarly to the Ukraine-Russia war, I don't think a lot of people 6 months ago would have predicted that China would be essentially fully shut down from COVID right now, or maybe just now coming out of it. Do you have any insight on what's going on in China, or if that situation is improving?
Yeah, it is. I mean, it definitely is. As we go through the summer, you're beginning to start to see an alleviation. I think that debate, though, is very much what's happening back home, because clearly the goods are flowing through now LA to a certain degree. It's got a little bit better, but we still haven't entered peak season. So the debate will be is when we start hitting peak season, which will start sometime around June, July, and we move towards that critical Christmas season, how does the system start to react from all the log jams that have taken place? So it's still very nascent. I'm seeing signs that I like out of Asia from a ports perspective, but it's still very, very early days. I think we're past the worst, but it's definitely still a mixed bag out there.
What signs do you like?
I like the fact that we're seeing throughput now through the warehouse, through the ports getting substantially better, particularly out of the biggest in Shanghai.
Yeah, my stance has kind of been like, well, China right now, with how shut down Shanghai and the rest of some of these cities are, is like as bad as it can get. So 6 months from now, it's got to look better than it does right now, right? Which I don't know if that logic checks out all the time, but I don't know.
And when the goods arrive, what will be the fate of the consumer as well? Because the consumer at the moment is still very hungry. They've got ample jobs and interest rates haven't gone up fully. That's the debate. What will it be like in the second half? And at the moment, the signs are okay, but that could easily turn.
Alrighty, well, Mark, it's always a pleasure to get you on the show. Congrats on the good quarter again. Look forward to having you on again in the future.
Thank you so much for your time, guys. Always appreciate your show.
Yes, sir. Talk soon.
Thanks a lot, Mark. Always learn a lot from his segments because he's obviously like boots on the ground. Like,
yeah, and it's so many different, it's like we don't have a lot of guests that can speak freely about like, oh, what's going on in China? What's going on with the supply chain? What's going on with consumer demand? And like Mark's one of those guys that you can ask, and he's kind of got insights into all these things.
Wait, did I told you about the sport coat, right? I don't remember if I said it on the show. I bought the sport coat. I bought it in March. I got it like custom made because I'm fly like that, and I didn't get it until early May. It was basically 2 months took me to get they said it would be 3 weeks. It was 8 weeks. And they said because it was stuck in China is what they said. So Mark is saying that those problems
goods are finally starting to flow through.
Yes, which is good.
And I also, for anyone who is like interested in the China situation, I feel like China specifically, or what's going on with China, is one of those things where like you can't really rely on just headlines from mainstream media. There's this guy, I'm going to drop a free plug for him. His name is Jared T. Nelson. I'm going to drop his Twitter. His Twitter bio just reads, Data/compliance lawyer in mainland China, CEO of Pathway Compliance, a PRC ALSP. I don't know what that means, but I don't know. He's an American dude living in China who tweets essentially his take on what he's seen on the ground, which is sometimes, different than what mainstream media is reporting, or sometimes similar. So
yeah, so I'm sorry, Reed Mitani. Sorry, man. I just saw your question. It's a really good question. I wish we had asked it. I apologize. It was just a smidge too late, which is unfortunate.
I saw his comment about Mark, but I don't see his question.
Oh wait, there is no question there. Reed, what was the question? Sorry,
I think he just he wanted the message relayed to Mark how much he appreciates his insight.
Sorry, Reed. Bummer. All right. Hey, let's talk about some stocks, individual stocks today.
Oh, we haven't done that at all.
No, well, we did a little bit with David. Warren Buffett proving again that he and he alone has the ability to move stocks based on his old trades. I'm referring, yes, to his 13F filing out last night. Paramount Global is up almost 15% today. Best day in quite some time. Why? Because at some point during the first quarter, Warren Buffett's Berkshire Hathaway acquired some shares. They bought, it wasn't even that many. They bought like 69,000 shares. I'm rounding up. I guess it is a lot because it's 11% of the company. So, okay, they bought 11% of the company, 69,000 shares at some point during Q1. This is a new position for Berkshire Hathaway. If you guys don't know what I'm referring to, every single money manager in the U.S. that manages more than $100 billion in assets is required by the SEC to disclose all of the things that they bought. No, not all of the things. All of the common stocks or funds that they bought and sold over a quarter. The deadline to submit these filings is 45 days after the quarter ends, which because of the weekend, that deadline was yesterday. And so yesterday we got a whole bunch of, they're called 13F filings, and we got a whole bunch of filings. Warren Buffett is the most influential money manager on Wall Street and ever, frankly. So when we see these filings hit, we always are interested in, what new stocks did he buy? What stocks did he sell last quarter? And that's the key, right? Last quarter. These trades are old. For all we know, Warren Buffett could have bought Paramount on what was the first day of the year? January 3rd was the first Monday. I think January 3rd. Yeah. He could have bought Paramount on January 3rd. He probably didn't, but he could have. Also, these filings have limitations, as Bill Wang and Archegos exposed in this very stock last year. Bill Wang, as we now know, was accumulating a massive levered position in this very stock, but did not have to disclose it because he was getting exposure to the stock, not via the stock itself, but via derivatives like options or swaps that are not required to be disclosed on these filings.
Remember, derivatives are vehicles.
Derivatives are vehicles, everyone, as we learned yesterday. So there are limitations to these filings. However, it can be, at the very least.
My question is, why Paramount and not Warner Bros? Which Warner Bros, I believe, is trading up on this as well. This is classic Warren. Look, so look at this forward PE. Forward PE of 9.9. This thing is cheap. Priced, so again, 9.9 your forward PE, and our S&P 500 PE is like 18 right now, so it's way cheaper than that. Price to sales, less than 1. Less than 1. This thing is cheap. I know, it is very cheap, and I've been talking about Paramount as
you have been
a play for a while. Again, my bull case was maybe not the same as Warren's, but I liked the fact that CBS was actually trying to compete with some of these other big players in sports, namely Disney and ESPN, saying, hey, we're going to get the rights to these Champions League games. And guess what? A lot of people throughout the world watch that. Now, I think other places in the world, they don't watch it on Paramount. They might watch it on something else. But either way, investing in live sports to me is something that I think a lot of more content, like if Netflix did it, I'd be more bullish Netflix. Let's check. So I'm on Warner Bros. Warner Bros. Same thing. Forward PE 7.5, price to sales 0.9.
All right. Well, let's look at this.
So wait, I think I'm just gonna get my crystal ball out here and say,
No, I have a thought though as to why.
I think Warren might come in and scoop up some Warner Bros. Too.
I have a thought. Well, hold on 1 second though. What's the yield? So Paramount has a dividend yield of 3.4%. All right. Does Warner Brothers even have a dividend? Does not.
Okay. Warren likes dividends. That's fair.
Let's get paid. I like Christian Gallagher's. This is basically the only value that Warren Buffett has, I think probably to most people, which is I feel better about my decisions when Buffett follows me into a trade. I completely agree. Okay. So for example,
You bought Flunk.
Yeah, I bought Flunk.
And then Warren bought it after you?
Warren, yeah, he did buy it after me.
You front ran Warren.
I did front run Warren.
Okay.
Actually, no, that's not true. I don't know the date when he bought this,
Right.
but it wasn't public when I bought it.
But you didn't know that he bought it.
I did not know.
So in like Schrodinger's
stock. Yeah.
Either Spencer or Warren Buffett bought it first. We'll never know.
We'll never know. We'll never know. But I do feel better about it knowing that I'm in the same boat as Warren. This has not always served me well.
Kraft Heinz.
Kraft Heinz was a train.
I know all of Spencer's stock
was a
stories.
train wreck for me. I thought, hey, Warren Buffett owns Kraft Heinz. How bad a stock could it be? Well, it turns out really freaking bad. All right.
Yeah, and let that be a lesson. Just like it's great to look at whale wisdom and see like what the big dogs are doing, but acting like you can blindly tail. I mean, look, like
don't do
what
it.
if you blindly tailed Michael Burry about shorting Tesla for like 2 years?
Don't
like,
do it.
You lost a lot of money. He might be right about it now, but he wasn't then. And by the way, I mean, let's talk about that for a second too. Michael Burry. I mean, dude, like there are a lot of moves.
Wait, what's his short now?
Apple. There are a lot of moves you could make in the market where I'd be like, all right, like I could see it. Shorting Apple to me is just like.
All right, I have a thought on this.
Okay.
And my thought is this is like a psychological thing. Okay, a guy like Michael Burry who has had so much success, in his career. Really in I guess in the latter portion of his career, because early on in his career he was a value investor, right? And then he of course got famous for betting against the housing market, and even more famous for being long the GameStop thing. A guy like this has had such a has had so much success in the last decade being contrarian that he kind of can't help himself.
Right.
Now.
He's like, oh, everyone
he
loves
just
Apple. I got it.
Can't help himself. He was bearish the housing market during a giant bubble before most people were. He was bullish on GameStop when the stock was near zero. All right. Now, both of those calls ended up being right to some extent. I don't know if the GameStop move was driven by fundamentals, but in any case, he got his thesis played out in some regards. But a guy like that just cannot help himself. He's got to be contrarian now. So that's my thought on that, is he just really can't help himself on this. So we'll see. There are many, 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 many stocks I'd rather bet against than Apple if it were me.
Yeah.
And also when you short Apple, what buyer are you betting against? You're betting against Apple, because Apple is the biggest buyer of their own stock.
Yeah, and I mean, BS brings a good point, saying that the volume is just so high. Like, there's so many bids out there that it's not gonna. No. I mean, it can drop. Like it can drop. If it's gonna drop that much, it'll drop slowly, like 2% a day over time. 2%, Apple's never gonna drop like. No. We actually did see Apple down like 4 or 5% in a single day a week or two ago, which I didn't think I would see. I agree.
Yeah.
Patrick Starr that he might be right on Tesla now, just because. And I'm not even speaking. I'm not.
Wait, is that the same Patrick Starr that just called us drunk a few moments ago?
Well, I don't know. I think maybe he said tired of listening to this too drunk.
I've had no.
Maybe he was talking about Warren and Charlie.
Oh,
Because I don't drink on Tuesdays.
I know. We've gone over this.
Yeah.
Never on Tuesdays.
Wednesdays, fair game.
Wednesday's a different story.
But Tesla, my point with Tesla right now, and this isn't me being a Tesla bear or Elon Musk bear or anything, just in terms of valuation right now, if you look at all like the high multiple stocks that have gotten crushed, Tesla has been in large part kind of holding on, and it's only really drawn down 20 or 30%.
It moves with the market.
With that 100, but with like an 100 PE, my point is that all these other stocks have basically gotten their value, like their, price to sales and everything crushed, whereas like Tesla is still very, very expensive. So if this environment stays the same, where growth is out of favor, I think Tesla still does have a lot further to fall.
Just look at Tesla and compare it to the Qs. I mean, it moves in lockstep. It's such a large weighting now, and the SPY too, for that matter. Just such a large part of it that really, it's going to move with the major indexes going forward because it's such a large stock, and unless that changes. Anyway, tying a bow on the Buffett thing. New position in Citigroup, ticker C. So that's up 8%. Wow, when saw some Citigroup was up 8% in a day. What else did he buy? He bought CE, not a name that I'm familiar with. He bought Ally Financial, ALLY, or some people call it Ally. Those people are wrong. He bought McKesson. Now that's interesting because McKesson's at an all-time high, or at least it was. Yeah. Oh, it's right there. It's right there on the doorstep of an all-time high right now. So here, see, Buffett doesn't always buy stocks that are in downtrends. Like,
no, not all. I mean, he was buying a bunch of Oxy. He bought more Oxy. Oxy's been an incredible uptrend.
Yeah, but we knew he bought Oxy already.
I guess Patrick Star was talking about us.
Oh, all right. I'm not drunk right now. And what else did Warren sell last quarter? He sold his Wells Fargo. Got out of that stock, which is up today. Go figure. And he sold his Bristol Myers and he sold his AbbVie. So those are the Warren's big trades from last quarter. Lineage asking, do people still bank with Citi? Yes. I think people are I think bank customers are surprisingly sticky. Or maybe I'm just extrapolating from my own experience because I've been meaning to change banks for like a decade and just haven't gotten around to it. It's one of those things. So I bank with Capital One, but I'm in the market for a new bank. Maybe I'll bank with SoFi. That's what Aaron says I should do. Or maybe I should bank with like Venmo. There's another idea. Unbank myself. Just a thought. All right. It is 1 p.m. I am waiting for our next guest to join, Dave Mazza from Direxion, to talk all about using leverage in your portfolio. In the meantime, were there other big whale trades that we missed? I'm sure there's a lot. There's a lot of buying and selling. Again, it's really just mostly more interesting than anything else. It's not especially useful. I definitely would not recommend that anyone buy or sell a stock solely on the basis of some rich hedge fund guy doing it, because they have different goals than you. They have different risk tolerances than you. I guess I wouldn't. That's all I would say. The only thing I would maybe add to it is there is a tool. It's not on Benzinga Pro, unfortunately, but there is a tool on a site called Whale Wisdom where you can look up what stocks were like the most bought or sold by all the hedge funds last or in all the 13 filings last quarter. So, for example, the most bought stocks or I should say not most bought, maybe most owned. And it just reads like a who's who of the largest stocks out there. So never mind. Here we go. Actually, this is useful. This is the largest stocks that had the largest percentage increase in shares held by what major hedge funds in Q1. So major hedge funds, let's say they owned 5% as a group at the end of the year. Now they own 10%. That's a 100% increase. So these are the stocks that had the largest increase in ownership. AMD was the biggest by a mile, Aaron. AMD had a 26% increase in ownership among the biggest hedge funds last quarter. AMD, followed by JP Morgan, followed by the XLF financial ETF, followed by Occidental Petroleum, which we know is mostly Warren Buffett, followed by a bond ETF, GOVT. Those are your 5 largest increases in ownership among stocks in 13F's last quarter. So again, AMD, JP Morgan, XLF, Oxy, and then GOVT. So a lot of financials, Treasury, a bond ETF, and AMD, and oil stock that Warren Buffett bought. All right. Somebody in the chat, I think it was William, was asking about using leverage in his portfolio. He was buying some leverage instruments, wanted some assistance. So joining us now is Dave Mazza, head of product at Direxion, who specializes in talking about how to use leverage in your portfolio. Let's bring him on right now. There he is. Mr. Mazza, how we doing today?
Doing well. Happy to be here.
Great to have you. So let's just start with this, and whoever was in the chat, please feel free to chime in because I don't remember what your question was exactly. But let's just start with this. What are you seeing in the last week?
Yeah, so I think the one notable area, and we've been talking about this for some time, has been the pickup in trading volume, but more specifically on the bear side, which means that these are daily trading tools, but that express either an inverse view or, simply put, sort of when you're going long to short the market. So these are funds like SPXS, SOXS, where traders are now, I think, because of the last 6 weeks of declines in the market, are now beginning to kind of either directly hedge their portfolios or take outright views that we're going to be seeing, obviously today aside and Friday aside, having continued negative returns out of the broader market.
Can you explain, David, how a volatile market or how an increase in volatility from day to day will impact the returns over time of these instruments? Because last week, I mean, Aaron and I were out, but Thursday was the day the market made a new low of the move. Volatility really picked up there. So can you just explain how an increasing volatile market will change the performance of these instruments over time?
So this is a point where we like to overemphasize, because we really want to lead with investor education, and so that traders who are using these products know how to use them appropriately. So when you note volatility, that's really important with the way these products work. When you have trending markets, and that could be actually on the downside too, but most markets trend on the upside. That's when compounding can work in your favor. And by that, I mean, because these are daily investment vehicles, we have to reset the portfolio on a daily basis. When you have volatile markets, meaning markets up 1%, down 2%, up 3%, down what have you, where the resetting mechanism is still going to happen, but your returns over that 3-5 day period are not going to look very close, potentially, to what the underlying index does, because we are either relevering or delevering. So we're buying more on an up day, selling on a down day to relever and delever. Again, these are daily investment vehicles. In volatile markets, we tend to have the term that gets thrown out there is called negative compounding, where your 3x or 2x returns do not line up with the theoretical index return, or what a leveraged index return may be over that period, because we are doing that on a daily basis.
Right. So the old adage of, like, the trading adage, like, the trend is your friend. The trend really is your friend for leverage ETFs. But like, if there is a trend, right? If the trend is up, down, up, down, up, down, up, down, that's not a trend. I guess that is technically a trend, but it's not a trend you want to be a part of. Yeah.
Correct.
Yeah.
Exactly. So that's when the trend can be on your friend again, and we've pulled these long-term charts up, right, of stock sell, right?
Yep.
And we know people come out and say, hey, I've owned this and I bought it, and why would I not do that? Well, because the trend was your friend for a long time. The trend is no longer your friend across the market, semiconductors, tech, what have you. And you can see kind of the sharp degradation in return that can happen. So if you have the ability to monitor your portfolio on a daily basis, both the bull and the bear funds can be good tools for you over this period, because the trend we're really kind of trendless, and we likely may be that way for some time here, because of course earnings hasn't really made a dent in kind of these bigger macro picture issues that we're continuing to face across the market.
Is there a difference in who would want to trade a 2x versus a 3x leverage product? I mean, do they behave differently?
I would say first and foremost, not really. If you're going to be doing a 2x leverage product or even a 3x leverage product, you need to self-identify yourself as a trader.
Right.
And I don't mean that facetiously. I mean that truthfully. And by that specifically, can you monitor? Are you interested in monitoring your portfolio frequently? So once we get that out of the way, there may be a benefit for someone who's sort of dabbling or first stepping in to look at some of the 2x products, because if you're wrong, you're not going to be as wrong as a 3x product, but they really behave exactly the same way. So the impact of negative compounding can get greater as you have greater leverage points on the bull and the bear side. But if you're 2 or 3x leveraged, it's still a daily leverage vehicle, and they're going to behave in the same fashion.
And the same goes for the inverse leverage, right? They all behave the same way.
That's correct. Now we have seen, and this is a fund that maybe we've spoken about before, just doesn't get as much attention. It's just an inverse 1x product, and that's SPDN. So that's inverse 1x. So just the daily return on a 1x basis. We can see it's obviously shot up over the last month, but more importantly, I want to point folks to the trading volume there on the kind of the far.
Look at that.
Really picked up. This is more of a direct hedging tool. Still a daily investment vehicle. Still need to monitor it on a daily basis, but because it's just that, if the market's up 2, market's down 2, this is going to be up 2. It's that 1-to-1 relationship. So this is a tool that we've seen traders gravitate toward over the last few weeks to really provide that hedge across their broader portfolio.
That's interesting. What other funds are commonly used as hedging tools? I imagine a lot of people may want to hedge some downside risk right now.
The other area, the other inverse 1x product that we're seeing pretty kind of, I'd say, episodic activity is CHAD. This is an inverse 1x product for China A shares. And yeah, you can see and that's why I point episodic, right? So kind of doesn't see a lot of action. And then some of these big down days, or someone's looking at some of an event, particularly some of the mega cap Chinese tech earnings that we've seen, that people are gravitating toward this product. Not nearly traded as frequently as an SPDN, but it's there for someone who wants that hedge directly against China A shares. Pretty niche, narrow area across the market, but it's there for you.
Justin JTV asking a question that David, you and I had talked about last week. And I'll just bring Justin's comment up on the screen here. I guess he got this text from you, or not you yourself, but from Direxion, or maybe it was you. I don't know. FINRA proposes limiting access to leverage and inverse ETFs. What does this mean? Are they going to require taking a test to use these products?
So thanks for that question. And yeah, certainly we've been discussing this through your emails, if you're signed up for our texts and in forums like this. FINRA has submitted a proposal for comments for questions about the utility and use of what's deemed complex products, of which leverage and inverse products were included. But this ranged at everything from leverage loan products, gold, certain crypto assets, so a wide range of different types of investment strategies. Essentially, the next steps are unclear. The proposal period ended. It had a record number of comments submitted.
Wow.
So thank you for those who did submit a comment. And really, as we stated in our response, and as I may have said before, we really believe investor education is paramount as opposed to limiting access. So the more we can do, the more recommend people visit our website. I know you talk about taking the quiz all the time, which we appreciate. But it's there. Those are there for a reason, so that people can either not just Heisman our products and say they're not for me, or say, hey, I'm interested, or simply just buy them without actually looking at them. Do the education. If they fit your trading strategy, then we welcome your use. But if they're not for you, they're not for you, and that's okay too.
Great question here from Lineage in the chat. Do the 1x inverse funds also suffer the nightly rebalancing degradation?
Essentially, yeah, because again, they're all daily investment vehicles, unless we were to state them that they wouldn't be. So the inverse 1x, though, because it's just that 1x exposure, doesn't have the negative impact of compounding is significantly less there. So you tend to see its return path follow much closer to the the inverse period over a week or a month. Again, it's not intended to be a long-term investment vehicle, but really used. We should think about SPDN as a kind of a more of a pure play hedge, whereas SPXS, which is a inverse 3x exposure, is when you want to express a downright negative view of the market, because its performance is going to be much greater, but it could be that could be beneficial to you if you get it right, but it also could be much worse for you if you do get it wrong.
All right, Dave Mazza is the head of product at Direxion. To learn more, I would recommend clicking the link that's scrolling across the bottom of the screen there, direxion.com/education. Dave, always a pleasure. Thanks for joining us today.
Thanks. Talk soon.
All right. Let's do this, guys. We're going to bring our next guest on in just a minute. Before we do, I wanted to talk about this headline I saw today, AB. I don't know if you saw this, but we don't talk about the SEC much on this show, but SEC dropped the hammer today on this firm, and I have to confess, I'm not even quite sure how it's either. I've heard both of it. I've heard Allianz. I've heard Allianz, maybe incorrectly. How is this firm pronounced? Allianz. I think it's Allianz, but anyway, let me share my screen here. The SEC dropped this press release this morning, and they just, as I said, dropped the hammer on this. So here's the story. Okay. This firm Allianz, they offered this portfolio or this fund to institutional investors, mainly pension funds, and they called it their structured alpha portfolio, their structured alpha fund, right? And when COVID hit and all this shit hit the fan, the structured alpha fund basically collapsed. And so the SEC looked into it and was like, yeah, you guys lied. You guys lied to your investors about the risk that this fund actually was taking. So they just said today, we're going to make you pay more than $1 billion in fines. We're going to bar you. This is crazy. They're going to, wait, I got to scroll down here. We're going to bar you from providing advisory services to U.S. registered investment funds for the next decade. That's a pretty big one. Anyway, this is why I wanted to talk about it, because this jumped out to me. Because I got to admit, my first reaction was almost to victim blame here, right? These pension managers, that they get paid a lot of money to not lose, to not screw up. Okay, these people are very handsomely paid, and they screwed up. They invested their investors' money into a fund that ended up crashing. But then I saw this and I went, whoa. All right. So it's outright fraud here. All right. This is what the SEC said. The defendants, so Allianz, they reduced losses under a market crash scenario in one risk report sent to investors from -42% to -4%. So basically, these firms have to out. They have to send out reports, do risk assessments, say, hey, under certain stress test scenarios, this is how our strategy will perform. And apparently the strategy in one risk report would have crashed 42%. They just said, let's just drop the 2. Let's just make it say 4, not 42%. Let's just make it say 4%. So they just changed the potential drawdown risk. And in another example, they smoothed their performance data out, their backtested performance data, by reducing losses on one day from down 18% to just down 9%, just because. Just why not?
Are you sure these weren't just like innocuous typos?
It's pretty freaking bad typo. It's a convenient
Some
typo.
poor intern.
It's a convenient
typed in
typo
4
too.
instead of 42, and now the SEC is getting involved.
It's a convenient typo that makes their fund look awfully good.
Yeah.
Anyway, obviously this is not funny. Okay, this is really, really not funny. A lot of people.
Where is this fund located? Allianz.
Allianz. So I said pension funds, right? So this is a fund that the pension fund for teachers, clergy, and bus drivers
in Germany. No.
What? What'd you say?
I don't know. I just googled Allianz, and it says Allianz is a German multinational.
Yeah, it's
services.
that's where it's based.
Oh, okay.
Yeah.
But
yeah.
Okay, so we're talking about U.S.
So
pensions.
this is a case where this fund, I mean, they basically just defrauded the very unfortunate people that had their pension managers invest in this stupid fund.
So did the fund actually fully blow up?
Yeah, I believe the fund blew up.
Okay. I remember a couple of weeks ago, one of the big red days, there was a lot of speculation that some fund out there blew up.
But again, this happened in March 2020.
Okay.
This is when COVID had happened, everyone's going crazy, and this fund just crashed.
I wasn't saying that. I was saying my point was that we don't hear about the details of it till a lot later. So I'd be curious to know if that was the case, whatever day it was, a week or two ago. But
and then by the way, this part also pissed me off. While they were able to solicit over $11 billion in investments, they meaning Allianz, by the end of 2019, and earn over $550 million in fees as a result of their lies. They lost over $5 billion of investor funds during March 2020. $550 million in fees alone. Yo, pension managers, fees kill returns. Even I know this. Come on. This whole thing just pissed me off. Anyway, all right. I don't know. Yeah, the whole thing, exactly. The whole thing is shady, Shelly. The whole thing is shady.
If it's rich people putting their money in with Bernie Madoff, which I'm sure a lot of regular people got fucked over with Bernie Madoff too.
These are pensions.
It's pensions and teachers and stuff is
disgusting.
Come on. Why aren't all pensions just through Vanguard? Why do they even need a?
Dude, I don't know. I don't know.
What was this company doing for these people besides blowing up their, I
don't know. I don't know. I mean, maybe because they have to justify their existence. These high priced pension managers have to justify their existence somehow, by investing in structured alpha. What does structured alpha even mean?
Well, it's funny because if you're in charge of allocating pensions, your number one goal should be to not lose money. Right. It shouldn't be ridiculous growth. If you're a ridiculous growth hedge fund where
unless it's massively underfunded, in which case they need the growth. But
right.
Yeah. All right. Let's bring on Christian Fromhertz here. Tribeca Trade Group. Christian was also at FinTwit over the weekend. Let's hear his brutally honest review of our conference right now.
Hey guys, you there?
Whoa, we are here. How do you do that?
I don't know.
He beat the intro. What's up, man? How we doing?
I'm doing well. Sorry, I just did something on my computer which just froze me up for a second. But wait a minute. I was listening to what you guys were saying. So this is a fund that I can only make money on when it goes up. Is that? And then I avoid it when it goes down?
Well, no, I don't think they were saying that. They were just saying.
I'm kidding.
They're saying if it goes down, it'll only go down a little bit, and then it went down a lot. Is what they were saying.
See, I selective hearing over here.
Yeah.
By the way, happy birthday.
Oh, thank you. Yeah. Appreciate that.
So I have
Christian!
a question for you guys before you before you ask me questions.
Yeah.
So, you guys obviously saw the flights. We're on a flight to Vegas. You were in Vegas. Did it feel like a
No.
recession is going on?
Oh no,
No.
my flights were packed, both of them.
No.
Yeah.
How about you?
And I know too, like people try, like, because sometimes the flights are booked, they give you the option to rebook your flight for a higher amount, and they were, I don't know if you heard this, but they're like crazy amounts. They're like, hey, how much?
Christian. So Saturday night, I was supposed to fly the red eye back to Detroit from Vegas Saturday night. I was having so much fun that I ended up switching my flight to Sunday.
There you go.
Still can't believe you did that.
But then when I showed up to my flight on Sunday, it was a Delta flight, and the lady comes on the intercom and she's like, "We overbooked this flight by 14 seats. We're offering people willing to stay an extra night a first-class ticket on a flight tomorrow."
Okay.
And $1,500.
That becomes
And the line, people just ran up there, and I was like, I could do another night in Vegas. Like, I'll just tell Benzinga my flight got canceled.
Right.
Get $1,500, buy a hotel room, get a first class seat tomorrow. Sounds like a win-win.
There's the rub though, because it's $1,500 minus whatever you would pay to stay there the extra night.
Well,
Right.
yeah, but someone in front of me in the line was like, ask them for a hotel room too. They'll give it to you. Like this couple, like squeezed them Delta out of everything.
Yeah.
Got first class tickets. They bought the hotel room and the $1,500.
Nice.
I think the $1,500 was credit though to Delta, which isn't as great.
There's the rub.
But I didn't end up doing it, obviously. But to your point, Christian, that was happening. I was a firsthand witness of that.
Very nice. Very nice. You almost got to stay there for another day too. That would have been interesting. But yeah, it seems like these the airlines, they're kind of making it up as they go along in terms of, hey, we'll book you on another flight, and then that flight is also, they're obviously looking to make space. But yeah, then they book you on another flight. So yeah, I don't know. I mean, these things could possibly, I'm not trying to be an optimist here, but it just seemed like it's there's a bull market going on in Vegas right now.
Well, yeah, I mean, it's easy, I think, to kind of see these things like anecdotally, and definitely Vegas was a good indication of like, oh wow, these people aren't worried about inflation. Like, people are spending their money at the end of the day. So then, but obviously, what's more important than just seeing those things anecdotally is looking at the data. And so far, some of the data coming out with consumer spending and stuff also looks strong. So either way, my whole thesis right now is everything we're seeing is still supply driven. There's been no real dip in demand. And I almost worry that all this talk about recession and stuff is going to, in a way, like if people are so worried about it, then they cut back on spending when they don't even, maybe we didn't even have to in the first place. Who knows?
Right, because people you basically are kind of causing it when you tell people to be concerned that a slowdown is coming, right? And you can essentially, in my opinion, bring down inflation by scaring the hell out of people and having them not spend any money.
Well, it works both ways sometimes too, where like talking about inflation can sometimes cause it, where if everyone's talking about inflation, then you see a car that you were going to buy for $30,000, maybe you were putting it off, and now everyone's talking about inflation. You're like, I'm going to go buy that car now before it gets to $35,000. And that people wanting to buy the things now before the price increases causes a decrease in supply and a spike in demand. So I've seen that theory thrown out there too, that just talking about inflation can in turn cause it, depending on how consumers spend.
Talking about more inflation.
Exactly.
Christian, do you have any specific names that we're going to be looking at today?
Of course.
Do we want to do, before we get to the names, a quick, I know Spencer asked for your brutally honest opinion of the conference.
Yeah,
it was
brutally
awesome.
honest.
Yeah, I mean, I don't go to a lot of these things because I stay in front of the screens. I think you guys had an event a couple of years ago that was in New York City that I also attended, possibly pre-COVID,
Yes.
and that was good. But I thought it was spectacular. I mean, first of all, we're staying at a great hotel. The Aria is a wonderful hotel to stay at. So you had that going for it, and everything. The food was great. You guys had some great speakers. It was a great event to network with. I had a chance to speak to a couple of people that I wasn't even following on Twitter, And it's nice to kind of hear their background and hear what they specialize in, because not only can you get some value out of talking to people that are similar to what you're doing, traders, but you could also find some product specialists too, which could kind of really aid in what your overall trading trading view is too. I love to talk to different people that are experts in like there was one guy who was an expert in shipping, another guy an expert in energy. Just so really valuable, I think, to kind of be able to speak to someone face to face and hear their perspective about what they're seeing too in the market, and what the overall sentiment is and so forth. So I thought I had a great time, and it was very well done.
Thank you. You know who I found out was there after the fact? I didn't get to see the light trading. You ever follow him on Twitter?
Yes. So I apologize. I should have introduced you.
I didn't even know he was there.
Yeah, I had. He mentioned, a few weeks ago that he was going. So it's okay. It was nice. We met up for a drink and so forth too. So it was great to see him. He's a great follow on Twitter.
Yeah, he's one of the best, frankly. At Canuck to USA with the number 2, I think. And he was there. I was whoa! I didn't know awesome. So I know you also liked the speaker on fractional options.
Yes, yeah, I did like the speaker on fractional options. I mean, I thought that was something really cool. You had somebody talking about, something which I think has plagued retail traders, is that a lot of times when you do the math in terms of looking at options and trading options, there is a science behind whether or not you're going to be good at it. And one of the things really is position size, right? Yep. And they were just saying that one of the things that has plagued retail traders is that the options just cost too much money for per their trading account. So I thought that was really interesting, making fractional options for things like Google, Amazon, Tesla, things like that, where retail traders do want to trade those names.
Because if you can't afford the 100 shares of stock, at the end of the day, it limits what you can do.
Yeah,
it totally limits. All right. Christian, what are you looking at today? I'm looking at a heat map, and I see mostly green. You got retailers, a lot of retailers red because of Walmart, but everything else looks pretty good to me. What are you seeing out there?
Yeah, so I always start with so I've got my screen shared, and I hope you could see that. But I'm looking at the S&P on just a 1 hour chart. Right? I kind of look at sometimes I look at the smaller time frame for clues, right? So I talked a little bit about this in the presentation that I gave. Well, actually, I talked a decent amount about it. But where we are right now is we're above value for the week, right? So this value area is based on last week's price action, all the volume. You can see on my mouse, I'm going over the shaded area, which is the volume profile. So we're currently above a significant level. So what I want to see, and we have a Powell speech coming up in about a half hour, but I want to see us maintain above 40.48, right? And then we could do some fun things like, get up to around like 41.48 in the S&P. And that's right around, then if you kind of go back to the daily chart, as I like to look at multiple time frame analysis, basically, that lines up pretty closely with the 20-day moving average. So this is where, so if you're thinking that this is a bear market rally and a nice move off the lows, here's where I would really want to be kind of not adding, positions, more or less taking more profits into that 20-day moving average, and then we can kind of see what happens from there. So again, that's a very short term. I do kind of look at the shorter term. I am a swing trader, but a lot of what I'm doing right now is a bit shorter term swing trading. So trying to basically adjust to what the market is giving me, and that's kind of my upside target, 41.47. If we could stay above 40.48, how's that?
Yeah. That sounds like a plan. Sounds like a good plan.
And then the last thing here, and then we can look at some single stocks. But the Qs, or NASDAQ futures, this one is actually inside value. So it has not been able to get outside of the value area. So it's still kind of range bound, even though it's having a great day. up 2%. But I would like to see this get above 305.15 for the Qs, and then we can kind of look north at this 317 level. But for now, we got to get above 305.15. I view it as more of a struggle if we can, for that to happen, because, they're still going to be raising interest rates. Cheap stocks are still where it's at. Things like Bristol Myers, things like Merck are doing very well right now. These are not expensive stocks. Bristol Myers looks like it's possibly breaking out here out of this little digestion zone. And Merck has just been absolutely on fire.
That Bristol Myers, is that an all-time high?
I don't.
No. You got to go back to 1999. $78.99. We're close though. We're right there.
I mean,
Wait, real quick, I don't want to interrupt, but so Powell's speaking, but it's not an actual Fed thing.
No,
right?
he's speaking at like a Wall Street Journal conference.
So
And then
he's
there's
not
the
going to have his
barrage
normal pumping powers.
There's what?
He's not going to have his normal pumping powers.
I mean, he might.
He might.
Yeah, we don't.
Who knows?
Yeah.
And then there's the barrage of other Fed speakers just to confuse the hell out of you
Which is why I'm choosing to bury my head in the sand and ignore all of it.
Right.
How about that?
I think that's pretty good.
Yeah.
So then we could talk about a couple names that saw option activity today too. This has great initials to it. CF Industries, has kind of spent some time underneath of the 50-day moving average, but saw a nice call buyer today as well as Mosaic. But overall, this still has to get above the 50-day moving average. I did not take that trade because I just like the CF chart a little bit better. It's on the verge of possibly taking out 110, but the agriculture space has kind of come alive. We've heard these stories about wheat and so on and so forth, but this Bungie looks pretty good too. Also first day back above its 50-day moving average.
And Justin astutely noting that, yes, that is a custom study on Thinkorswim. And you can learn more or get that, Christian, I assume, by going to your site, I would presume.
Yeah, they can. I only sell it to members because I teach it to them first so that they've got an understanding. But
I just dropped the link for you in the chat, Justin. There we go. TribecaTradeGroup.com/services.
And then what? You guys want to talk about some semis? How about semiconductors?
Yeah. Well, I was noting earlier that AMD was the most acquired company, the most acquired stock amongst all the 13F filings last quarter, if you care about such things. I saw they caught an upgrade. Was it an upgrade today from Piper? I think. I don't remember anymore.
Yeah, Piper.
Yep. Yeah. Hey, we're talking about buying quote unquote good companies, and it's a little bit subjective, obviously, but AMD for the last decade plus has been or maybe not decade, 8 years, been a very good company. That fell. How far did this thing fall? Did it fall?
It went from like 150
fell
down to 85.
Like 50% at one, right?
Yeah,
so
right about
nice bounce
45.
now. So how do you look at this one?
So short term, again, sorry to give you these short term levels, but 103.61. I think just and again, that's like right in front of it. But I would make sure that it could stay above both 103.61 once it gets there. But this is a good thing that this thing's up 8% today, and then you could also use basically the 50-day moving average or $99. As your stop too. So I like this too, even though it's below the 200-day moving average. I'm a trend trader, so that's a little bit of a no for me. But I like the fact that it's finally doing something. It's working off a double bottom. So I think that looks pretty good. And yeah, you got a nice broker upgrade today.
I'm going through just the rest of. I'm just looking at the market and looking at what's up and what's down, and just trying to look for outliers. If you have any questions for Christian, guys in the chat, please drop them in there. Drop your tickers in there. Well, we can throw a few of them.
I might look at some like just QQQ flyers that expire tomorrow, just in case Powell does his normal thing.
Going with the Wednesday options.
Yeah. I mean, look, I'm a big proponent of looking at history, and at least from what I understand, more times than not, when Powell speaks,
I'm sure.
I always say this. And
I'm
Spencer
sure
always
there's data.
says
There's data on
it's
this.
not true, but
No. I'm not saying you're wrong. I'm just saying I don't know that you're right. You know what I mean?
I agree. Anecdotally, from my perspective, for like the last like year, it seems like, well, even no, going back to like COVID, it seems as like he got the nickname like Pumpin' Pal for a reason, right? So
Yep.
I think it's. I mean, you do have to kind of take it with a little bit of a grain of salt that the Qs are already up 2% for the day.
you're right, Christian. You're
So
very
it
right.
could
I
be
would
that
like
it
it
was
even more.
the lead into the pump and Powell.
Yeah, maybe it's a reversal. Who knows?
I don't
Yeah.
know.
I certainly don't know.
Can you go over Caterpillar? They
Yeah.
they announced a buyback and a what was it? The guidance reaffirmation today, I think.
Yeah, it's good guidance and what $15 billion buyback or something like that, which is pretty sizable. So Caterpillar's a bit sideways chart to me. I would watch 209, right? So the level that it basically is. So it jumped into its value area for the month. You're going to have to deal with this. Well, actually, 200-day moving average, it's above already. But I would say next upward target is probably, unless I see something here, we did take out one of these red lines, virgin point of control. I think if it can maintain it, if it can kind of stay above where it is right now, 224 could be something that you could target to the upside. And I always like when somebody asks me a chart. I'm in Deere. I thought Deere was a good spot. So I've taken a couple targets since yesterday, but this name came in nicely to the 200-day moving average and is kind of just starting to bounce a little bit. So are the steel names. A little bit of like Nucor has had such a big drop into its 200-day moving average that I'm also in a little bit of Nucor as well.
Deere reports Friday, I want to say.
Yeah, I'm in this for a run into earnings.
Nice. Yeah, the pre-earnings run it's a thing. It's a thing. Always valuable to look 1 or 2 weeks out and say, who's reporting in a couple of weeks? Maybe we get a little bit run up into it. It is a known phenomenon. What about Walmart? They had earnings this morning. Wasn't great. It wasn't like end of the world bad, but it wasn't great either.
Yeah, this is just Walmart is a tough name, I think, to trade. So, I mean, do I think it could bounce here? I do. Now that you could see, so I make reference to these red lines a lot. They're virgin point of controls. They're an area of high volume that prices return to. So we've taken out a lot of these things. We've taken out 3 of them. So this would be a logical place for it to bounce. If it doesn't bounce here, the next down level is 128, but that's a bit far away. So I wouldn't be surprised if this thing bounced. Maybe not today, but maybe tomorrow you might see a dip buyer come in. So that's what I would kind of look at. But I view that as kind of a tougher name. Home Depot is the other name that reported. The level that I'm watching in Home Depot is call it 311. I would really like to get back into Home Depot. Home Depot has been like just a favorite. It's a stock that I like. It's a company that I like, but I'm waiting for it to get back above 311. So that's another name that reported earnings. What do you guys think of Palo Alto?
Oh man, I mean, the whole cyber theme was like for so long. It was like your saving grace in tech, and what is it now? It's down to 470. Wow. I remember when it was at 600, like a month ago. Oh
yeah,
man. I mean, look. Yeah. Look, I mean, I still like if you had I feel like if you had to pick one thing on tech to bet on the short term, I would go cyber. And it's always been a space of the haves and the have-nots, and Palo Alto was always like a have. So I would skew bullish and look at like support on the weeklies. I don't know. What do you think?
Yeah, I'm thinking I might give it a shot for earnings via like a call spread. That's kind of sometimes where I use options when you've got an event risk and I want to define my risk. Spreads are nice to use because you're lowering the options going into earnings are very expensive because of the event. You could lower that cost by going long one option and short the other one. So I'd probably do something like a $10 wide call spread in Palo Alto. So this is difficult because This is a weekly bar, and clearly we're going to have a big event. I would like to see it close above 481 by the end of the week, and to capture if it does get a positive move on earnings. I'd like to, I will probably have some exposure via call spread. This way, I can only lose the premium in that type of trade, but it's right into that support. Whether or not it holds at the end of the week is up to the earnings gods.
Real fast. What is the expected move on Palo Alto? I'm gonna look it up for
the
you.
implied move.
Yeah, the implied weekly volatility is 8. What does that come out to? 8%. What is that?
So everybody, like anybody who asked this question, this is very simple to calculate this. What you want to do is take the price of the nearest maturity at the money calls. So that's, let's say, 472. So that's around like $20 plus the at the money puts, which is about the same $20. And then you divide by the stock price, 472, and it's about 8.5%. Right. So that's another reason why. Yeah.
Or you can just get rid of the last step entirely and just say, all right, it's about $38, right? Right. You just go with like dollar amount, right?
Yeah.
Yeah. So yeah, about $38 is your expected move in either direction. I was also curious while you were talking about Palo Alto. I have a tool that resource I use called Market Chameleon, and it has historical earnings behavior leading into and out of the earnings report or stock behavior. And if you go back and look at the last few years, Palo Alto, actually, if you go back and look at really every earnings report in the last year and a half, the stock has traded higher out of its earnings report in the days and weeks after earnings. So it's been a post-earning. Yeah, it's been a good one to own after earnings.
After
in the last,
okay, that's a handy tool to have.
Yeah, in the last year plus. So, okay. Were there any other tickers in the chat? No, Borin, we are not going to stream JPAL because it's not a Federal Reserve event, so we're not going to be doing that. I don't want to get on the Wall Street Journal.
Is it he's speaking at like an energy conference or something, or is that?
It's a Wall Street Journal thing. I don't want to.
That was Bullard this morning. Bullard.
All right. What about CSX, which is a railroad? CSX.
So CSX, again, pretty sideways looking chart. I would like to see this get above 3407. 3407. That lines up very closely with the 200-day moving average. Yeah, that name's just been kind of hanging out lately.
Yeah.
Same thing with UNP. Yeah, I own these for a little bit, and I think I got stopped out. I was a holder of UNP, and once this thing started to come in pretty decently from the highs, I don't remember exactly where I got stopped out, but I know I did.
The last one here. Let's do Snapchat. I tweeted about this last night because literally at least once a day, Snapchat sends me a notification that is just reeks of desperation. Spencer, your random contact is on Snapchat. Okay, that's good. I don't care. I'm not going to be. I refuse to be a monthly active user. I refuse for this month.
So
I will not be
you as a bot.
I will not be an MAU. I'm not going to open your app. Don't count me.
Snapchat, I would say watch 2658. It's going to have to get through that level on a bounce, but this thing is going to have a lot of work to do. It's in a pretty heavy downtrend.
Yeah.
Can I give you just a couple names too?
Yeah. Go for it.
The chemical space, right? So I like names that are moving up. I like names that are showing relative strength, that are doing something different than the rest of this market. I love what and it's not just one company. It's several companies going on in the chemical space. So your CC, which had good earnings, Dow's having a nice day today. LYB is another one too, and these are not expensive names. That's partly there's probably a pretty good business reason why, fundamental reason too, but if you look at these companies, like this LYB is super, super cheap. That's what the market really likes right now. trying to think of there's one other one too. OLN is another one too. Notice they're all going up.
Olin. That's I was gonna bring that up if you didn't bring it up as far as chemical companies right now, because you know what Olin also produces on top of chemicals?
Viral TikTok memes.
Ammo.
Yep.
Ammo. Okay. They own Winchester, I believe.
I didn't know that.
Yeah.
How do you know that? That's my question.
I mean,
Olin's a St. Louis company.
Oh, of course it is. Everyone's a St. Louis company.
Well, no. Olin, Anheuser-Busch. That's about it.
Okay.
Enterprise.
So you could wait for something like this. I mean, I wouldn't necessarily chase Olin today, but you've got a nice little cup pattern here. If this name happens to kind of fill in a little bit, and the other thing is that I've been noticing in this chemical space is that when they do dip, watch for a level of support, because they seem to be getting bought on dips. But yeah, I mean, if you get like a check back, it doesn't have to be all the way to 56. Could be a little shallower than that. Then it would kind of like fill out a nice cup and handle type pattern. But I think the overall group looks pretty good.
Nice. All right, Christian Fromhertz has been on with us. I know there's more questions, but we'll get him next time. Christian Fromhertz, follow him on Twitter at @CFromhertz. Recommend doing that. And it was great to see you for the first time in person in 4 years last weekend. And hopefully next time it's not too long. But in the meantime, we'll see you back on here in a couple weeks.
Absolutely.
So,
look forward to the next Vegas conference. Vegas, baby.
Well, maybe not.
Vegas,
maybe not Vegas next time.
Miami. You're in New York, so
New York, Florida, good.
We heard a lot of people.
Maybe not Vegas.
Complain, but just say that Vegas is pretty out of the way, whereas we did on the East Coast, maybe it's a little bit more. How about Atlantic City? Best of both.
No, please, anywhere but there.
Best of both.
I gotta go, guys. After that comment.
All right, see you, Christian.
See you guys.
Oh gosh, I'm from New Jersey. I'm vetoing the Atlantic City thing. That would be a terrible idea. I would not want to go to that conference. That's where you want to go when you. I don't want to be networking in AC. All right, 148 here. So we're gonna have Jerome Powell speak in around 12 minutes, but we're not gonna be streaming that. What we will be doing is ending the show at 2 and going over to the roadmap. Big show planned today with those guys: Brian Moore, Chris Catchy, Alyssa Cole. They have a great show planned. So that'll be at 2:00 exactly. Christian, Atlantic City is where dreams go to die. I've not been there myself in about a decade, but that's quite all right. All right. Here's what we're going to do. We've been talking internally about experimenting with different forms of content on this show, trying new things. We have to pick up our rate of experimentation, but we're going to try something today. We're going to air a pre-recorded interview, something we don't usually do on this show. This is a pre-recorded interview that our colleague Michael Murray did. He did this with someone who I actually know, John Viglotti, who is the senior vice president at OTC Markets. And Michael and John spoke to somebody from Grayscale at their virtual investor conference. I believe this is last week, and we spoke to them about that. So Benzinga has just partnered up with Grayscale, and we're very excited about that. So I'm going to air this conversation that we had it was us and OTC Markets. And if you don't know who Grayscale is, it's the GBTC. That's their product. And OTC Markets is the market on which all non-exchange securities trade in the U.S., like GBTC, like Adidas, and many names you've heard of, many international companies that you've heard of, all the major cannabis stocks in the U.S. that touch cannabis trade OTC. So that's what that is. So we're going to air this conversation now. It's about 9 minutes long. It'll take us into the end of our show. So enjoy.
Ray, thank you so much for joining us. How are you?
I'm great. Thanks for having me on.
Wonderful. Ray, it's such a pleasure to have you and Grayscale here representing and talking about this event coming up. To kick us off, though, before we speak about the event specifically, can you give us a little bit of background on Grayscale and then who you are and what your responsibilities inside the company are?
So Grayscale is the world's largest digital currency asset manager. We have 18 products today, 9 of which trade publicly on OTC markets. Our goal is to provide investors with a safe, secure way to access digital currency. And today our AUM is about 25 billion.
Fantastic. Okay, let's talk about the VIC a little bit. How does the VIC fit into your broader IR strategy? Can you give us a couple of pointers there?
Grayscale. So we have over hundreds and thousands of public investors out there. And one of our goals as an investor relations team is to be in front of that audience and to speak about the subjects that are important to them and to engage with them. And this conference is really the perfect way to do it.
Wonderful. Very excited to watch that presentation, of course. Let's talk about Grayscale specifically for a second to wrap it up. Can you talk about any upcoming developments for the company that you guys might have coming up in the next few months?
So as I mentioned, we have an application outstanding with the SEC to convert GBTC to an ETF. And the deadline for that is July 6th. And we have investors from all over the country who are writing in. We have over 5,000 letters to date, essentially expressing to regulators their views around this conversion. So it's going to be exciting to talk about that. And we're also really excited to continue to, talk about how we're continuing to research the European markets and the kind of demand we're seeing from there.
Amazing. Ray Sharif Eskari, Managing Director, Head of Investor Relations from Grayscale. Really looking forward to the presentation at this event and everything else coming up from Grayscale. Thank you so much for joining us.
Thanks for having me on.
And now switching over to John Viglotti, the SVP of Corporate Services and Investor Access, talking about the event. John, welcome. Thank you so much for being here.
Thank you very much, Michael.
Absolutely. John, we just heard from Ray Sharif Eskari about their presentation from Grayscale at the event and some of the things coming up on their end. Let's turn over now and talk about what the Virtual Investor Conferences, or the VIC, is and how they've grown over the past 2 years. Can you give us some context here?
Absolutely. So the Virtual Investor Conference Series, or affectionately known as the VIC, is a community of over 100,000 investors who we are feeding a steady stream of investor education and opportunities to hear directly from and engage with the founders and senior management of public companies. So when we launched the conference series a little over 10 years ago, we had two goals in mind, and they are the two objectives that we still march to today, and that was to create and grow a community of serious investors, and the second was to provide a platform for issuers and public companies to efficiently engage with those investors, raise their visibility with those investors without the time and cost to travel. So yeah, our business has changed in the last 2 years. The business has grown exponentially, but I think the good news for us and my group is that we're probably one of the few companies that did not have to pivot a business model, because we were always 100% virtual in what we did. So what did change was, we no longer had to fight with CEOs to convince them that that participating in a virtual investor conference was worthwhile, or just that general opinion that a virtual investor event did not provide worthwhile engagement. So what we saw 2 years ago is a great expansion of our conference business. We went from hosting 10 events a year on average to 35. And having that expanded conference calendar allows us to put forth new sub-industries, emerging industries, different investment ideas to our investor community. So just in the last 3 weeks, we've hosted a psychedelic conference, an esports, an iGaming, a 3-day mining conference. And of course, on May 19th, we have a full day crypto and blockchain conference.
Outstanding. All very exciting. And to talk a little bit specifically about how companies are using the VIC platform, can you talk a little bit about some of the benefits that these companies receive?
Absolutely. I mean, the companies that we attract are companies who are looking to expand their visibility with investors. I would say historically, most of our presenting companies have been micro to smaller cap, along with some large cap. So it's really been a barbell in terms of market cap. And the larger cap companies are companies who are focused on or have resources to devote to retail engagement. So our typical presenting company is using this to reach a new audience of investors, to expand their reach. But we do have other companies, and one company comes to mind, a large cap insurance agents company that's pretty well known, but they have a large retail base, and they presented 3 to 4 times a year at our conference series as a way to give their retail investors a voice, to the ability to engage with senior management and hear directly from management. But that's really typically most of our presenting companies are looking to expand their investor base.
Terrific. And then talking specifically about crypto-focused, Vic, what's the purpose and goal behind this event? Can you give any details on the presenting companies or some of the things we should be on the lookout for there?
Oh, absolutely. So I'd say the goal is to educate, and introduce our investor community to leaders in the crypto and blockchain space. So we have over 80 companies in crypto and blockchain that trade at a top tier of our marketplace in the OTC, QX, and QB. And the companies represent, a wide spectrum of that industry. So we have investment management, investment trust companies such as Grayscale presenting. We have trading platforms. We have banking and payment platforms that are built on top of blockchain. We have a compliance and intelligence company that's offering services around blockchain. And we have companies that are offering blockchain services to other participants in the industry. And the event is held on Thursday, May 19th, and kicks off at 9:45.
Terrific. And of course, we just heard from Ray Sharif Ascari how excited Grayscale is to be a part of the event. It sounds like it's going to be an absolutely star-studded conference. How can investors gain access to this event? Where should people go to learn more?
Absolutely. Great question. They can go to virtualinvestorconferences.com. So that's plural on conferences. And if they click on our calendar, they can see the 30 plus events that we have scheduled this year. If they click on our crypto event, they can see the agenda details and how to log in. So we're going to kick off at 9:45. We have a fireside chat with Grayscale, and that'll be followed by a full day of presenting companies from the industry. And attending investors have the opportunity certainly to learn about these companies, but they can participate in the Q&A session. And they also have the opportunity to schedule one-on-one meetings with the presenting companies following their presentations.
Terrific. John Viglotti, SVP Corporate Services and Investor Access. Really looking forward to this event. Thank you so much for sharing a few details. Looking forward to watching this come to life.
Thank you, Michael.